A very good morning to you all. I'm not sure if you remember, my name is Rich McDonald, and I'm your host here of Trade Live with IG.
Calling yourself Ricardo.
Ricardo, mi amo, no, that's Spanish, isn't it?
Spanish.
What's Italian for my name?
Don't do it under pressure, I can't remember. No.
Ricardo. How are you, Christopher Beecham? Welcome this Monday morning.
I'm very well. I'm warm, as you might expect, but we're surviving.
Of course.
20 degrees when you're walking to the station in the morning. It's quite something.
20 degrees
Eye on this morning.
there, probably about 30 degrees in this studio.
Yeah.
What is that?
Until, what, I think 7 in the morning, so it's only just kicked in, really.
That's what, is this a new thing?
Yeah, this is live from London. Look at that. We've had that camera for years. We have to go and clean it periodically because sometimes the spiders crawl across it.
That's quite cool. I like that. So that's towards St Paul's. You can see in the background there. Very nice. And yeah, it's not quite Milan, though, is it?
No, not in that way. No, I imagine Milan's more scenic.
So I had 3 days there, and then I went down to the beach. Went down to just next to Positano.
Oh, very stylish.
Santa Margherita, Liguria.
Excellent. The weather was good there?
It was all right.
It was all right.
Yeah.
Oh, it was
33 degrees. But it was a very different 33 degrees from London. It was,
type, isn't it?
yeah, pleasant.
That means you missed the cricket. You weren't here for the cricket, were you?
I haven't seen any cricket. You're going to have to explain to me the market as if somebody who hasn't looked at it.
Yes, exactly.
week.
You haven't cared, yeah.
So when I left, I think we were firing missiles and dropping bombs and stuff.
Yeah.
And so we must be down at what, 5,600 or something?
You were adamant last week. I'm so pleased you're here because you were adamant last week. What can Iran do? It's going to get worse from here. Complete and utter. I mean, 6 missiles. They knew were coming and targeted empty airbase, and then that was it. Ceasefire. Everyone happy.
Do you disagree with all the facts that they haven't actually managed to do the job?
Oh, I think that's the problem. Yeah, I think they've set it back by months is probably the best assessment. But yeah, I think they've got a major problem going, all these trucks that turned up on the satellite, we can literally see them taking stuff out of the plant. Where's that gone? Oh, we don't know, but we did make a big explosion, so it's all good. And any suggestion that they didn't do very well is unpatriotic as well. Did you see that one with the defence secretary, the Fox News reporter?
No.
Unloading on the Fox News reporter, saying, you're the worst one. And she said, I'm the one that's been on your side all the way through. But they get rattled very quickly.
They do.
Yeah.
It will be very interesting this week. We've got a big vote coming this week, haven't we?
We should get the tax bill vote this week, shouldn't we?
It is, yeah.
Get through
first one at 9 a.m. Eastern time today.
But all over the Wall Street Journal, this headline was it the Republicans are still split, aren't they? So, and there's Trump saying on True Social, just get it passed, and then the growth will pay for everything else.
Yeah, of course it will. Yeah. Don't worry about the debt. Right, what have we got coming up on today's show then? That was a long intro, wasn't it? Thank goodness we don't keep on playing the music all the time. Right, so me and Beachy with you through till 8:35, and then we have my new best friend, Dylan Rattigan, joining us, 8:35. We had a few vinos with the boys. Me, Sosnoff and Dylan ended up in a Chinese restaurant on the last night in Milan. As you do with Italian food. And then we've got that all sessions opening bell. It's going to be interesting. We just printed 6,200 on the S&P, 44,000 on the Dow.
Record highs.
And then we've got a trade of the week from Axel Rudolph. What is he going to do?
You ask me this every week, and I tell you the same thing. You wouldn't.
The trend is your friend.
He's going to go. Yes, exactly. Well, maybe you'll say he was very good last week because it was short dollar yen, and that worked out
right on
the day itself. I think it was. So that was a great example.
Okay, and now it's at 144.
And now it's 144.
And then technically speaking, so good morning to you. I have missed you guys, I must admit. We've got Friar Tuck over there in Sydney. Chilled. What a great time to be in Sydney as well. Maturin, 38 degrees in the Valencia region. Wow, that's about as hot as the Discord is. I've been hearing great things. I've been hearing it's taken off. So, well, that's 60 people. That's fantastic. So really, really happy to hear that. Gecko, Avi Fine. It's just the camera. There's no sunburn here. Idarok, good morning to you. Neil Brewster, good morning. Parky, Monkey Man, Great to hear. And I see Boise isn't in there yet, but I have had a great email from Boise. This is going to set us up for overnight action. Let's go into that now. Right, Christopher Beecham. So this is from Mr. David Boyce. I'm sure he won't mind me reading it out because I think it sets us up for the week really well. Could be an interesting 2 weeks with S&P at all-time highs. The big, beautiful bill making it through the Senate, potentially, seeking the tax cut. Mag 7, all super bullish last week, right? Microsoft, Nvidia, AMD, all those new highs. But knocking on the door, of course, is July 9th, end of the 90-day pause on tariffs, with Trump saying on Sunday he's not planning to extend a pause. And then, of course, the tensions in the Middle East that you now say don't exist. Is the market getting a bit ahead of itself with the uncertainty? Or is TACO the only certainty? Is it time to look at buying puts for mid-July expiry, or is it worth waiting past the holiday this Friday? Is VIX a good idea, expecting at least one shocking Trump headline, or do we just stick with Trump? The trend is your friend, not Trump is your friend.
The trend
What
is
do we
your
say?
friend.
This tariff deadline, 9 July, but we already had Besant last week saying, well, we can push it forward or we can push it back. I don't think their heart's in it. I really don't think. For last night, so if I go and Friday going after Canada, it felt like the rerun of March. Are we just going to go do this again? We'll start with Canada, and then we'll get to everybody else again. Because now once the bill's out of the way, maybe that's the way.
So tackle. You think he's tackling it?
I still think he's tackling. I mean, I would happily go with that one.
Seeing as you coined the phrase in the first place.
I didn't coin the phrase. That was Mr. Armstrong and the FT. But yes, I managed to shamelessly use it for our own benefit in the press across the board. So I'm quite happy to talk about it. But it does feel like that you've got Canada backing out as well.
Well, yeah, that takes us on to the...
And this is you from Carney, of course, because he got elected on being tough and standing up to Trump and all this kind of thing, because his opponent was very much supposed to be friendly with Trump, really, and then lost by such an impressive margin. And yet Carney's gone, oh no, it's probably best to just leave it. So you can't really argue with him.
Yeah, this does drive me crazy, though. The fact that companies worth 3 trillion, 2 trillion, 1.8 trillion get away with tax yet again. We're just... all this whole idea of the biggest companies in the world paying their fair share, and it looks like Europe might even give in. It is just absolutely insane that we're seeing the deficits that we're seeing.
Yeah, I think there's a broader conversation to be had about the amount of tax that companies pay. This is turning into a very socialist podcast show for the morning, but how when you're dealing with the US, Canada, Britain, I mean the welfare bill stuff for the past week with the Prime Minister and the U-turns and the French budget and Germany, where is this money going to come from? And okay, you don't tax, Reagan's thing about if it moves, tax it. That's the government's view. If it keeps moving, tax it again, whatever it is. But it's not great that you can't get this through. But when these companies can go running to borrow a phrase, daddy in Washington, to borrow from...
Well, that's it. Why? This has nothing to do with the government looking after single companies' taxes.
Yeah. If you have a problem, ring up the Oval Office. Someone's being mean to us. Can you go and sort it out?
Yeah. And oh, by the way, here's another 20 million for your inauguration.
Yeah. It's not great from the optics, but are you gonna stop using Amazon because of it or whatever? If it's this kind of thing, people can moan and complain about Bezos and Zuckerberg and what they get, and yet they're still on Facebook. They still use Amazon. It's tough. Can't stop entirely. Can you? Anyway, it's very interesting that they can go and hide behind the US government to get this sorted, because that's probably what happened. Somebody's rung him up.
Yeah. Oh, definitely. Definitely.
But but it does mean you're probably going to see some sort of, obviously the key thing for Canada is to keep these trade talks going. So they've done the cost benefit and thought, well, the money we get from this is outweighed by the risk of another round of trade war.
Well, that's why we're trading up from 61.80. I think we hit on Friday night.
Yeah.
And
200 almost on the dot.
Yeah, a few people getting hurt on the old zero DTs there, I feel.
Yeah.
And must admit, I thought we would give it up. I thought we'd be down 61.60 this morning, just naturally because it's a Monday. But of course, it's July 4th week.
Yeah, if you look at July as a month, it's always very strong the first half, particularly into Independence Day, and then it starts to peter off.
Yeah, yeehaw.
Hell of a relief rally into those Mideast ceasefire talks, which is kind of odd because the market wasn't that bothered about war anyway, because you saw there was so little response from Iran. Yeah. And yet the reaction was so euphoric, really, so quick.
Yeah. It's very interesting week on the economic calendar side. So let's have a look at that, what is coming up, because it shifts around a little bit because you've got that holiday on Friday and you've even got half day on Thursday as well.
Half day in the US, isn't it? So
yeah,
for their tax avoidance holiday, whatever it is, Independence Day.
So German inflation rate, we've got Monday 1 o'clock. That looks a bit random.
No, that's correct.
Inflation at 1 o'clock.
Yeah, German inflation comes at 1 p.m. on for some reason. I don't know why.
Right.
But it does, yeah.
Their retail sales were very weak this morning. That was rather surprising. Minus 1.6% on retail sales in Germany. You've got, JOLTS. That's when it starts getting interesting because half an hour before that, you've got Powell speaking. So Jerome Powell speaking at 2:30 tomorrow afternoon. Then you've got at 3 o'clock the JOLTS. And then you've also got the ISM PMI for manufacturing coming out on Tuesday. That's not up there, but Tuesday, 3 o'clock, ISM manufacturing PMI. Thursday at 1:30, you've got non-farm payrolls. Estimate only 100,000.
Yes, and the unemployment rate is supposed to edge up, I think, to 4.3, 4.4. So, and I think this is the other thing about last week, of course, is the comment about you've got various Fed members breaking cover to saying, well, I'd probably think we should cut in July. They literally voted for a hold. Yep. But it's really the chances still of not of a July move, but a September move. Was it 94% last week? Someone can correct me if I'm wrong on that.
Well, let's have a look at our Fed Watch right now. So for the July meet, it is now 80-20.
80-20.
80-20 for staying where they are.
But September's now 74. Sorry.
74% chance of a cut. Yeah. So the probabilities, are they going to be swayed by this week with Powell talking and with the non-farms? Let's have a look at the expectation there. You've got, where are we? Non-farm payrolls. Oh, there's so many numbers. They're up here. There we go. 110,000 on this one. 4.3%, as Chris says.
Yeah, just nudging higher. Enough to sort of... I think that the Fed's intention is still to cut. But the pressure from Washington, obviously, you had Trump picking on Powell again. I'm a very stupid person.
Yeah. And
stubborn.
Potentially going to replace him. Well, not replace him, but announce the replacement early.
Yeah. So you're going to have a shadow Fed chair that's just going to sit there and say, oh, it's ridiculous. But yeah.
So that's our... What else have we got on the front page of the Times? Well, there it is. Republicans struggle to pass Trump's big, beautiful bill as the debate drags on. We're going to be hearing about that all this week. They want to get it passed by Thursday at the very latest. And there was a vote, an initial vote, 51-49, which was allowed the debate to begin. And that debate begun last night.
Is it a straight majority, or do they have to get a sort of 60-40 split?
That is a very good question.
I haven't done my macro tourism reading yet on that. I still need to.
I would imagine it would be, but I don't know that for sure. So,
and of course, Elon's had another go, hasn't he?
Yeah, no, I haven't seen it.
Interesting, isn't it?
Do tell us, what was Elon on his birthday?
Again, is his birthday?
Oh. It was yesterday, yeah.
I don't know how he celebrated. Let's not go down that.
Chart off, guys.
Yes. Again, criticising the Senate bill, saying it increased the deficit too much. It's the same argument as before, just not quite as strident.
Yeah,
but
he is very passionate about it, which I've got to say I respect.
Yes, and I think you can. There's a key thing. Historian Neil Ferguson talks about Ferguson's law, which is not named after him, but a Scottish academic.
Oh, really?
That says when the debt, the percentage of your GDP you spend on debt repayment surpasses your defense spending, is when a great power goes into terminal decline, and the US has just passed that level. And if you look at Spain, France, Britain, once they pass that level, then it's essentially the end of it. So that's concern that obviously if you're paying out more just for your borrowing than you are to actually run the defence budget, it's not a good sign. So he has a
and we know the path. We know the path of interest rate is just going higher, 1.1, 1.2. I think it passes the welfare state cost in about 2 years' time.
Exactly. So it becomes unsustainable very rapidly. This was Trump's point about if Powell would cut rates, we could shave $600 billion off the debt bill or whatever it was, some ridiculous number. If there might be other consequences if you start doing that. But so you can see why he's animated by this.
So, of course, if you've got a big burgeoning interest rate bill, what you do is sign a bill to pass another 3.3 trillion of debt being added to the
borrow
pile.
some more because you need the money now. So it is difficult, but then there's no appetite for spending in the US. Not a single sort of desire at all, really.
Right, let's have a look at the front page of the Times then. What have we got there? Entry-level jobs plunge by a third since the launch of ChatGPT. Oh, it's not going to affect our jobs market, though.
Well, currently it is, yes. I'm still one of these. You can complain about the advance of technology and destroying jobs. People have done that since 1800.
Yeah,
and it still continues. But yes, the short term, those vacancies down by 31.9%. Job site Adzuna found. So this is a bit of a puff piece on the Times, really, from Adzuna. But tough times.
Graduate roles, apprenticeships, internships, and junior positions with no degree requirement have fallen by 31. That sounds like you could to be a presenter on a show about finance. Really, that's about all the qualifications you need, isn't it? No degree required.
No. Will you speak for yourself?
Well, history, that doesn't count.
Oh no! Cheers. Thanks very much.
Read a few books.
Terrible thing to say. Oh.
Right, so where does that leave us then? Let's have a look at this this market of ours. We are 61.98, having traded 6,200. I've been absolutely crushed on that. I'm still short a few of the 6,000 calls. I'm short the 6,100 calls. I'm short the 6,175 calls. So I'm going to have to do a little bit of rolling up on the 6,000s today. But, if we think it's going to be smooth sailing from here to the end of the year, then I think dream on.
I don't think anybody's just suggesting that. I don't think
that's what I'm saying. So I think I'll get the chance.
I should think that there will be some turbulence. It's not like an airline captain at this point. Between now and say October at least. That's probably your window.
Or 2 weeks time.
Or 2 weeks time, maybe. But then we said that a week ago, and look where we are now.
Yeah. The FTSE. So save our stock market. Indeed, in the UK, we had murmurs last week about Shell interested in BP. It sounds like, from what I hear, that there have been some kind of background talks going on, and they have basically said, right, well, it's not going to happen in the next 6 months, so we may as well deny it.
Yeah.
However, leaving themselves open, if somebody else comes in for BP in the meantime, then they can get involved.
Yes, they can, if BP asks them, they can make a bid.
And if it's an agreed bid.
Yeah. So there is it's not quite a 6 months nothing, is it? So there's an interesting piece in Times this morning, the opinion piece saying that Shell shouldn't be buying BP because it's too big a lunch, too much debt, that kind of thing.
Well, that's one thing, is that he's doing a restructuring of his own at Shell, and should really focus on another 9 months of that. Yeah,
without sort of trying to do too much at once.
Yeah. Waka Waka, the only person who is more bearish than I am, there he says, market is up, market is in la la land, ignoring everything, all the warning. There's just too much money around. I think that's what we think.
If you chart it against M2 liquidity, whatever it is, they do move nicely in unison. And I saw a chart the weekend that said that you should therefore see, and you're like this 6,800 by the end of the year if it continues. If I can find this now, because that will trigger you something.
What's that? That's 10%. What do you get in the FTSE? because I am tempted to be fairly long footsie here.
Yeah. I think
As a hedge.
I think there's a further value coming into the FTSE 100 because it's still so cheap, really. Oh, there we go. If you take global M2 and you lag it by about 11 weeks, I'll send this to you. You then project at 6,800 by year end.
Because of where M2 is likely to go.
It already is essentially. Yeah.
Right. What does that do to gold then? Because gold we've got back below 3,300.
It's probably short-term weakness, isn't it? Really? You think it's going to reverse?
Shouldn't it be correlated to M2 as well?
It should find that way. It's all as again your point about all this money sloshing around has to go somewhere. I should think. Well, I mean, look at gold. I mean, it's what a brief correction. Or interesting at these levels. Bitcoin 107. Oh, how's our SWC done? That was crazy price last time I looked at it. £2. Wow, that came back down to earth. Jeez. Oh my goodness. Talk about liquidity or lack.
Wow, that is a roller coaster. So SWC, that's interesting because at £5 it seemed a little bit crazy. It got ahead of itself hugely. I haven't done the calculations, but I would imagine at 2, that's starting to look interesting again.
Yeah, probably.
In fact, well, I'll do the sums on that later and have a look. But yeah, £2 seems there's probably a lot of stock sloshing around because of the raisings, but in purely on valuation terms of how much Bitcoin he has been buying, I would imagine that would look decent. But yeah, that's one to keep an eye on. And yeah, what else have we got? Currencies. Shall we have a quick look at the old FX?
Yeah, of course. Last week was the dollar getting smashed across the board week, wasn't it, with the Powell talk? So, and we are at new lows this morning on the dollar basket. Actually, I think just eking out.
Really? So, do you think that's because of the big beautiful bill?
That and obviously the concern about Powell and Trump and the independence of the Fed at this point.
Right.
I think it seems to be the way this is going. So it's been a great week to be short the dollar and long everything else.
So that, in theory, should be good for commodities.
Yes. Yeah.
Oil
and natural gas not loving it this morning. So in natural gas down another nearly 3% in early trading. So that pop didn't last on Friday.
And then copper. I've been reading quite a lot about copper, about this spread between the high grade and LME. So the spread between the two is about 14 to 15% now.
Right.
And what I was reading was suggesting that there could be a 25% tariff put on high grade. So therefore, that's why it's trading at a 15% spread, but it could go another 10%. So be careful on that one if you're playing LME and high grade. So of course, the high grade is the one that trades at 513, and the LME is the one that trades near 10,000.
So now we know what you were reading on the beach last week.
Yeah, that was
Hopper research. Gosh, you really know.
I was in the plane home. Good. Right, we are 7:54 a.m. on this beautiful Monday morning ahead of 33 to 35 degrees. We haven't even checked how many subscribers we got now. Are you watching? Are you watching and not subscribed? Hit that subscribe button for us. Hit the like button for us as we go into today's chart of the day. What are we still on stocks? What
are we?
A European stock today.
Oh, gosh.
Right, so remember this is in euros, people. Let's count you down. First one to get the answer. Let's see who's going to win the first one of this week. 3, 2, 1. Let's go. Right, welcome back for the opening bell. Parky, 1977, smashed it.
Very good.
Santander, we did not get this in the house. All I could say was, I don't know what it is, but I like it. I want to buy it. Because that looks like a nice chart.
It is. But, well, yeah.
Talk about finding a level and then...
Yeah. And retests as well. If you look at that dip in the tariff dip, but it still retested the previous highs in April. So
yeah. I like that.
Perspective. Yeah.
Thank you for that one, Dr. Watson. In the end, and do you know, Dr. Watson saved a life. Last Sunday, he was walking by the Thames, just down by the Thames Clipper, and a poor little kid called Johnny had fallen into the Thames. Saved his life.
Who did?
Dr. Watson in the gallery.
Who's Dr. Watson?
James that
Oh, did he?
That fixed your microphone for you.
Ah.
So
Are they gonna give him a
yeah,
medal?
everybody was standing around phoning ambulance. Some people were filming him, and jumped over a fence, ran to a boat, grabbed a rope, and then went and lassoed the kid and helped pull him out.
Fantastic.
Quite impressive, isn't it?
Round of applause for that man.
Yeah. So, right. Jugger's saying Santander's at €7. No, that can't be.
Oh, Steward's inquiry.
Steward's inquiry. Unless there's different... No, there can't be different Santanders. Right, we are... get your bell, Chris, please. Ring that bell, Chris Beecham. Come on, it's time to open the LSE. What are you going to do without... that? Right.
Share price.
Are we ready then? So, what have we got happening this morning? We are off and running. They're rather quick to open it this morning, actually. Lloyd's, 77 pence, as it's always been for the past 3 weeks. 76 to 78 in any size you like. National Grid, 1066. Great year. Great year. What happened in 1066, historian?
Oh, William the Conqueror. Great year.
Right, so the grid on William the Conqueror. Bats, £34.40. Legal and General, £255. See, the FTSE's just, everything stays the same price. BP, £368. Barclays decent, actually, £337.
When the S&P hits 10,000, we'll still be talking about the FTSE 100 at about 9,000, won't we? That's kind of the doom we're facing, aren't we, really?
Let's see what else we've got on the downside. Ooh, WH Smith completing their sale of the high street business, down 1.95%. All these retailers are getting hit.
And that's after good GDP numbers in the UK this morning. Well, okay GDP numbers. But
And Glaxo down 1% as well. Right, let's see. Where is... it's because of the... because of cable.
What, the strength?
The strength. I would imagine the strength.
We'll make a market analyst of you yet, really, because it's always debated with the actual impact of strength and cable. But yes, it's a good reason. So we'll go.
Right. I am going to buy a little bit of FTSE to dip my toe in the water because I'm so short S&P that you can see there. So there's my positions. Short the 6,000s, short the 6,100s, short the 6175s. Short the 6350s and short the 6600s.
Remind me again what the definition of madness is supposed to be. Doing the same thing over and over again.
I'm also short puts though. I'm short 5400s, 5350s, 4850s, 45 and 4400s. So, but for today's play of the day is, you can see there, long the 6,180 calls in $40 a point, and I'm short the 6,210 calls in 120 a point. So if we can get up to 62.10, I'm happy there.
Right.
For 9 p.m. tonight. If we go to 62.20, then that's my break-even point. I'll start to get in a bit of trouble after that. So I'm hoping not for
tune in tomorrow.
62.50. Yeah, 62.50, and that's going to be messy. What else have I got on? Not much. It's a very holiday book. I've got along a bit of EasyJet. That was my my wonderful trip home. Yeah, very happy. Sat outside on the tarmac in Milan in a bus without air conditioning for about 25 minutes.
So you flew EasyJet?
I love EasyJet.
I thought you'd have been a BA kind of person.
No, we flew out Alitalia or ITA as it's now is, and we flew back on. I flew back on Squeezy Jet.
I see.
While Sosnoff went down to Sardinia for a week.
Ah,
Not bad, eh?
no, not at all. Not at all.
No private jet involved.
Huh.
Right, Rheinmetall up 1.3% then, 1,774. Another one that's kind of stuck around that level by the seams. What else? Siemens, ABB, relatively quiet morning there actually.
It is really. It's a very quiet. Well, it's not a quiet week in some ways, but it's certainly from a sort of actual scheduled headlines. Very little in the way of earnings. You've got Sainsbury's this week in the UK, but that's probably about it. So watch the supermarkets this week.
What is interesting? The UK retail sales were a big miss. Now German retail sales were a big miss.
Is there a pattern developing?
Yeah, it's just worth keeping an eye on. Who would that actually affect? Let's say consumers actually were starting to get squeezed on their disposable income and were slowing spending. Who would you... Tricky, isn't it? Because it's not the luxury goods at the moment.
No, you wouldn't go for that, and you might not go for supermarkets yet. Really, maybe that takes a while to feed through. Maybe some of the more obvious high street stores. Maybe it's just the standard discretionary spending. I mean, you don't want to short Next, really, generally, because it's such a strong performer. But
yeah, it looks a little bit vulnerable, doesn't it? One that jumps out there, Adidas, sub 200. What could I be thinking of when we speak about Adidas? What gave me the best last day of my holiday possible?
Oh, do tell us. I'm sure you're about to.
Oh, my goodness. Here it is. Chart off while I get it up, guys. There it is. The beautiful, the one and only. We've only talked about it for approximately, well, I'll tell you when I started talking about this. Not only do we have an advert on a pairs trade, which has come very nice, but I started talking about Nike in my audition for this job back in September. So I said that it was going to have a swoosh. It was going to go down first, so I'd be selling puts, and then it would start to go higher. Well, it's gone a lot lower than I thought it would.
Yeah.
So that must have been at 81 it was trading then. But up 15% on Friday there.
Yeah.
I can see it trying to get to 75. I wouldn't be surprised if it even traded 75, but I definitely don't see it above there yet. So I'm now, options-wise, I'm now selling puts at the 68 level, and I'm selling calls at the 76 level. So 68, 76 strangle there. I think Nike's probably just repriced itself to a level that's...
But it's very poor long-term performance. It's
been horrific.
It's awful. I mean, and JD Sports, so I looked at them both on Friday. It's finding a theme that has underperformed the index, even the FTSE 100. Very, very poor. Both of them over the last 2 years, really.
It's interesting. JD Sports started to move before Nike numbers.
Yeah.
Did you notice that?
Did they move on from going into? Well,
no,
it's always
all last week.
Better to travel than to arrive, I suppose.
So this was, and I know Andrew McKelvey's been watching this one, and pointed out, look, JD Sports has gone up 15%, and that doesn't normally happen. That was before Nike results came out.
Interesting. So would you be? I think is this a sell the rally moment in Nike if you're looking at it from a longer term view, or is it?
No. This is the start of something.
You think it's bottomed?
Absolutely.
Long term.
Very high conviction.
Okay.
Elliot Hill is a genius when it comes to Nike.
Okay.
It's like if Michael O'Leary was put into British Airways, I think British Airways would be up 100% in a matter of weeks.
It's interesting. So you like Nike, where the stock price is going down, it's at 33 times earnings.
Yeah, but the earnings are completely wrong. That's the whole point. That's why it went up 15% on Friday, because he said in the conference call the headwinds are starting to abate, and from here are win now.
Okay.
And it's certainly, it needs another 3 months. I did not expect it to be up 15% on Friday. I expected it to be up 5. But now that it's turned that corner, it's starting to get the momentum, and it's earnings upgrades all the way from here. So if you want to get in early on an earnings upgrade story for the next 2 years, then that's what it just presented you with.
It's got a lot to do, though. I mean, look at it. Anyway, yeah, well, we will see. So you're going bottom picking in Nike.
Oh, I've been there for months. We've got a whole advert on it by Nike short Adidas.
You've been averaging in. Good. Well, there you go.
No, I've been short a lot of puts on it. So at last, that paid for my short calls on S&P. Will Nike crash this week? No, Monkey Man. I think that's it. That's it. Turn now. I mean, by all means, it could trade $70 again because it's had such a big move. But the upgrades are now coming out. So I think 6 to 8 is now the bottom of the range. JD Sports, though, that's really interesting. 71 was an opportunity there. I missed that. I hope some of you were on that. What else have we seen then, Chris?
This morning, very slim pickings across the board in RNS numbers, really. Not much going on at all. The interesting headline, City M, this new M&S sandwich that's got strawberries and cream in it.
No.
Which
apparently in a sandwich?
Yeah, it's a Japanese thing, apparently. It's they brought it across.
But also, it's just Wimbledon publicity, isn't it?
It is partly, but also because this is a VAT question. Is it a sandwich or is it confectionery?
I mean,
Should you charge VAT on it or
just
not?
using something like Wimbledon for some blatant
shameless advertising.
Shameless advertising. I mean, I can't imagine anybody would do that, would they?
Do such a thing.
So it's just not the kind of. No juggling from you then.
No. My mother-in-law can juggle, actually.
So that's right. We are all ready for Wimbledon. So starts today, doesn't it?
It does. The hottest start to Wimbledon ever or something ridiculous.
Right.
Yeah.
You can just imagine week 2, there's going to be thunder and lightning.
Yes, exactly.
Yeah.
Actually chuck it down next week.
Yeah. I looked at tickets last night. Guess how much it is to buy tickets to the men's second round?
The second round?
A pair of tickets.
400 quid.
£2,200.
The tennis. Bonk bink, as they say.
If only we sponsored a proper sport rather than cricket.
Thank you very much. Look at that cricket last week. What a great story. 371. No one thought they were going to make that.
Against who?
Against India, of all people.
Right.
No, that's not an easy game. And
No.
they've done really well there. So
Yeah.
viewers at home, you can see the light leaving Rich's eyes. The problem with Scotsmen, they can't talk about cricket.
I played it once at school in 14 years. Right, Rolls-Royce up 1.6%. We got Trainline strong today. Canal Plus is strong. Rolls-Royce 969. Is that new highs? We haven't had £10 Rolls-Royce, have we?
I don't think I've seen £10 in it.
Wow.
They're in the Times again this morning, I think, talking about something or other.
Absolutely incredible. Well done, everybody. I know Kate. Kate, have you still got your Rolls-Royce? Of course you have. There was an interesting question, and this is one that we might go into in 5 minutes' time. Is it a psychological? Is it a valid argument not to buy a stock when it's much higher to add to your position because it takes your
average up?
Your average up,
really. Yeah.
So we're going to cover that in 4 minutes. That was a question from Kate that I was told about. So I think it's a really interesting one because the whole psychology of losses and is your loss a loss before you sell the position? That was another one that I had with somebody a couple of weeks ago.
Oh, okay.
And
yeah.
So yeah, we'll go over that in 5 minutes' time. But for the moment, there you are, your best performance on the London Stock Exchange. Imperial Brands up 1%, as is BATS, BAE Systems and Rollers, the big names. And then Glencore having a decent move as well. £2.90 on Glencore. That's getting back there. That was your big opportunity down at £2.60, I think, there, as we see Copper.
Fresnillo up as well this morning. Gold nudging 3,300 this morning in early trading. So some strength there in precious metals.
Right, let us know what we've missed then. Go pop it in the chat. What have we missed? Roll B is asking thoughts on AMG.
AMG?
AMG, yeah. What are we talking when we say AMG? I automatically think of Mercedes, but do you mean Atlas Metals Group or
Affiliated Managers Group on the US Stock Exchange? That sounds like an exciting company.
Or Critical Materials, a Dutch company? Yeah, let us know what you mean on that one, and then let's have a quick look at SWC as well. Where has that opened? It has opened up 8%.
Yeah.
So that's funny because, mind you, it's a big spread at the moment, so it doesn't look like it's traded yet. We're going to take a quick break. When we come back, we're going to be launching into fast markets, and we're going to be talking about the psychology of holding positions, cutting positions, and your average in price. See you shortly.
Bye-bye.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back to Fast Markets, everybody. So today we're talking about the psychology of positions and positioning. What do you do if you've got a big gain on a stock and you still like it, you're thinking about adding to it? And what do you do if you've got a big loss on a stock? What are the two different psychological approaches, Chris Beecham? What do you think?
It's really hard. So we talk so much about opening and closing, but I think holding is half the battle. It's much harder. Really,
Yeah.
when you're sitting on a big gain, it's natural to think, oh, I don't want it to lose. And Jesse Livermore, the legendary trader, of course, said most investors fear that their gains will get smaller and then losses will get smaller. And you need to change that around. You have to hope that your gains will continue to get bigger, and and you could fear that your losses will get bigger because it will make you cut your losing positions more effectively.
So what do you think of this idea of the average price? Does the average price matter?
Yes, I think it does, particularly if you've bought something and it's gone up. Do you add the idea is that you add to your winners and you cut your losses. But of course it's very hard. You should treat every time you buy it again, if you like, as almost a new position entirely, really. Go through the same thought process, should I be buying it here? What's the view? And maybe you don't buy as much though, because you could also pyramid in. So you buy 3, then you buy 2, then you buy 1. So rather than sort of doubling up necessarily.
But you can also treat them as different positions in your book, can't you? Because if you click on the little plus, like this, for example, here. So I've got, 2 different openings on the same day, and of course 2 different entry prices. So you could. That's one option. For me, it's never been something I've bothered about. Is the average pricing for me is irrelevant because it's all about the P&L.
I think so. I think that's usually the way to look at it, really.
Yeah.
But always just, try not to, obviously don't average into a losing trade. Don't add to it if you're already losing, really. It tends to be the rule of thumb, doesn't it, really?
Yeah, I don't know, chart off. I don't know if I believe in that. For example, like EasyJet at the moment, right, I've got a £20,000 long position on. And I bought them at 540 and now it's at 527. When I'm entering a position, I'll never buy 100% of my total size in the first.
No, this is also true. You don't have to buy it all in one go, do you? And you don't have to sell it all in one go either. This is the joy of averaging in, if you like. You can always trim and add as you go. You don't have to.
But I do agree it's harder to buy more if it's gone up.
Yeah, I think, take Rolls-Royce as an example. Would you be buying it up here? Or I think Rolls-Royce would fall into the category of, I like it, it's got room to run, but I'm not chasing it here. If it pulls back, then you've got to fight the urge to worry about if it's going to keep falling. But if it has a pullback, then that's the time to dig out your shopping list and say, what are the stocks I'd like to buy if they dropped, say, 5-10%, maybe, as a rough idea.
I mean, the obvious thing is to put options over the top of it.
Yeah, you can start to sort of... A lot of people don't want to complicate, of course, so you can think about it purely in that sense of, would I buy more here? The answer probably no. For Rolls-Royce, what would I be looking for? Kind of weakness.
Of course, the important question is, what does the earnings outlook look like? You have to forget where you bought it. I actually, to be honest, and it was Kate that posed this question. First of all, I would sell if you've got an ISA, right? Because I'm not talking tax here, right? If it's in a book where you don't have capital gains tax as an issue, so that's not anything to think about. If I was sitting on a 1,000% gain, right? You're keeping that for your ego.
So what would you do?
Sell it and start again.
All of it, or
I would sell all of it, and if I wanted to buy it again, I would buy it again. Now again, stamp duty, that obviously complicates that matter. But I would think about, do I want to buy Rolls-Royce at 972? Now you can only do that if you don't have the position already. So I would actually take all those profits. Again, you've got to think about capital gains tax. You've got to think about stamp duty. If stamp duty didn't exist, as IG's calling the government to consider, then I think it would be best to clean your slate and then question, do I want to buy Rolls-Royce at 975? Because if the answer is no, why are you holding it? You should not be holding something that you wouldn't buy here.
It might. I don't agree with that at all.
Go on, tell me the psychology of it then.
You should let it. It's very hard to do because you're going to sit there worrying about it. But if you've invested so much, quite literally, in getting into that position, throwing it away, you might not get a pullback for some time.
No, I'm not talking about a pullback. I'm talking about this very same day.
Oh, well, I wouldn't buy it now, but I think...
Well, why are you holding it then?
Because I think it's going to go up further.
Well, then you buy it.
Well, no, you don't buy it more now. You would wait, I think.
No, I'm not saying buy more. I'm saying if I had a 1,000% P&L on this, right? If I invested 5,000 and I've now got 50,000.
50,000.
Right? Then I'm showing up 45,000. Right? Sell it. Get rid of it. And then buy it again a minute later. So your P&L is 0. And then you find out whether you want to buy £50,000 worth of that thing or not.
See, I can agree with your logic of selling it all, although I'd probably say keep some of it just to see what happens. I wouldn't then buy it back again.
Well, then you shouldn't be owning it. That's my whole
I
point.
think you should. I think you should be happy to sit on these things.
No. If you start the day with, what would it be, 500 shares, 5,000 shares, and you end the day with 5,000 shares, it shouldn't make a difference what the P&L is.
No, I think it does fundamentally because you're looking at where.
But that's pure ego.
I don't think it's ego. I think it's more a sense of.
But you've got the same number of shares. You've got 5,000 at the start of the day. You've got 5,000. All you don't have is a massive big P&L to.
Yeah, but that's your
pat yourself
cushion
in the
to
back.
ride out the volatility. I think that's your cushion to say.
You don't need a cushion for P&L.
I know, but say Rolls-Royce were to now come back, say 75p back to 900. Then I think you'd still be massively in profit. But you still be in a position.
But that's my thing. It doesn't make a difference whether you've got a profit or not. It doesn't psychologically. It should not make a difference.
But it's
if
all
you're
about
in
your
profit
entry
or
point.
loss.
It's all about where your entry point is, and where you're.
Not for an investment.
No, I don't know. I think I'd fundamentally.
That is purely ego and psychology. If you want to own a stock, you own a stock whether your P&L's plus or minus.
Yeah, but when have you owned
On
it?
an investment, not a trade.
When have you owned it from is the key thing. I think if I had the wisdom and the foresight to have bought Rolls down at, I don't know, 289 back in February 2024, and I was looking at it now.
But you're keeping that to pat yourself in the back every
I'm
single
keeping
time you
it
look
because
at
it runs and runs, because it's been a great runner.
No, that's what I'm saying. So sell it, take the psychology out of it, and buy it back a minute later, and then have 0 P&L in it, and then see how you feel about the position.
Well, I'd feel very different then if
But you can.
No, I would. I'd feel very different about holding it from 2024 if it dropped 15% tomorrow, than if I'd bought it today and it dropped 15%.
Exactly. So
tomorrow.
you're too comfortable with a loss because it's a loss of your profit. You're more comfortable having a lessened profit than you are
suffering a loss.
than suffering a loss. That should be absolutely no difference in your thinking.
I'm not convinced by
That's exactly how you start to lose money again.
But I wouldn't be. I don't know why you jump in at this level.
Exactly. So you shouldn't own them. You should sell them.
It's
If
all about
you
the
wouldn't buy them here, you should sell some.
No, I think you and I are coming at this from different angles, but
no, there's the only question in town is, do I want to own this share today or not? At £9.74, doesn't matter your entry, it doesn't matter your P&L.
I think it fundamentally does. Your entry does fundamentally matter.
Psychologically.
Yeah. I know,
Because if you own them and I don't, right, then my thinking on Rolls-Royce should not be different from yours. If we're both going on the same fundamentals, technicals, whatever it is.
No, I think it fundamentally matters where you got in and
But
where.
that's ego.
No, it's not. I don't think it's ego.
Of course it is.
No,
it
I
can't
think
be anything else.
It's a view on where your position is and what you're prepared to suffer as a loss. So, I knew they put a poll
Which
up.
is psychology.
But I
What
think-
you're prepared to suffer as loss is psychology. It's got nothing to do with the actual investment.
But it's not ego, I think. It's more a question of what your entry point affects your view on the company in the short term and your holding of it rather than
But
as an investment.
What else is it other than ego if you cannot sit with a loss and you pat yourself in the back with a profit?
But if you buy it now at 975 and it drops 20%, and
You've lost money.
yeah, but you've got to wait. But if you've got to wait for it to get back again to 975 before you get
You
back.
don't have to wait. This whole thing about waiting, a loss is a loss on the mark to market. There is no such thing as it's not a loss until you sell it.
No, I entirely agree with that. Yeah.
So you don't have to wait until it gets back to 975. You just take the loss.
I didn't need to take the loss because I was going to hold it.
Because you were in profit. So,
Yeah, 'cause I'm still holding it.
so a profit shrinking is not the same as a loss.
Yeah.
Rubbish. Utter rubbish.
No, because I'm prepared, because if I've got my entry point is so much lower, I'm prepared to sit through that dip until it gets back again.
Which is completely psychological.
Why should I give up on my profit that I've already got? And
Because
make it
it's
more.
affecting your decision on whether to own the stock
I
here or
think
not.
fundamentally it should affect. I think we've got 8:28, by the way. I think we're running out of time.
Oh, this is brilliant. I did not expect this today from such a question. It really does show you.
It does.
And there's no definitive answer on this. This is purely opinion. But Kate Murphy, thank you very much for sending in this question, because you can see that it's a huge difference in the way that people can think that have both been doing this for 25 years on the psychological effect of, is a loss even if you don't sell it? Is a profit something that you should hug and hold dear to you? And should it affect your thinking on whether to own the stock? The only way to find out whether you feel you should own a stock is by selling it, taking it off, and buying it back straight away and sitting with zero P&L on it, and see if you feel the same psychologically about the position or not. But Chris prefers to sit with his comfort blanket of a big
I think
P&L.
the position of where you enter is the most is going to fundamentally affect how you view it.
You're thinking, doesn't affect the stock. The market does not care what your entry
No,
point
I
is.
don't think the market should care what my entry point is, but I care.
Why?
I think because I think so much time and effort goes into getting a position in. If you get it right, like Rolls-Royce, you should fight tooth and nail to hold on to that, not throw it away lightly.
What, to help your self-confidence? or
No,
what?
I think because of winners tend to keep winning. I think you should put all this effort.
Yeah, but it's the same if you sell it and buy it back straight away again. It's still, you've still made money on
You'd
it.
want to. I'm happy saying sell it all and just sit and wait for a pullback. But I don't understand this jumping in, jumping out, and then probably jumping back in the water.
Because a big P&L should not ever make you more comfortable to hold a stock or less comfortable. It is entirely on what the future earnings potential is.
Yeah. But you're prepared to sack. I would come at this a very different angle. And I'd be interested to see what the viewers at home think.
Well, there's Blake Sevens talking there. I've been trading in out a Rolls Royce from £2. So imagine you've sold it at 2 and you buy it back at 3.
Well, you could have held it and then it gets to 3 anyway.
No, but that's a different conversation. We're saying it should not be harder to buy it back at 3 just because you've held it in the past. As in, a stock is a stock, a new day is a new day, and if the earnings potential changes, it's like SWC at the moment, right? I sold SWC at £1.50, but I'd probably buy it back again today at £2 because the...
Yeah, but that's a different chart. That looks different because you've had the pullback. That I would agree with. But Rolls-Royce, I would wait for it. That's
No. I'm Blake Sevens' point I'm talking about, that he sold at 2.
Yeah. But he was happy to buy back again.
Buy back at 3. Or the S&P. You sell it at 5,800 because you're worried about Iran. It shouldn't stop you buying it back at 6,000. You shouldn't feel like an idiot because you've sold something and you buy back in higher. Because that, again, is ego.
I'm not convinced.
If you're a 400-meter hurdler and you hit the 7th hurdle, you should not run into the 8th hurdle with a different mentality.
No.
It's a brand new hurdle. You're a tennis player and you've just lost the game.
Yeah, don't throw it at me again. I can't.
You gotta go into that new game without. There is no previous position or involvement in a stock.
No, you shouldn't let what has happened the previous 8 trades affect the 9th trade. It's the same thing with music. If you make a mistake in a bar, you move on. But the way the mind works, it tends to go, I've ruined that, and and it weighs on your mind. You have to move on. It's a new note, it's a new bar, whatever. Keep going. But I think you and I come at this with very different perspective on this one.
Well, but neither of us has got Rolls Royce. Unfortunately,
We're not the ones
He's
in the
only
fortunate
one that
position
does.
having to worry about it. But it's a burden, I think, isn't it? If you're sitting on this, you've done it so well. You're going to think, oh, what happens if it drops now?
I wonder if it's that when you've. I wonder if one of us prefers money in the bank more than, because I clearly, you like a profit to be sitting in the stock, whereas I like my profit to be sitting in my bank.
I think you could make an argument for saying, oh, do I want all of it tied up in Rolls-Royce, or can I release it to better opportunities? Because maybe the best growth in Rolls-Royce in the short term has been done. Mm-hmm. So you say, well, maybe I shouldn't have all the allocation here. Because again, it's all about weights in a portfolio, because now Rolls-Royce has gone from this amount to this amount. So it's now squatting in your portfolio like a big hulking thing that you then need to cut back, because it's now having too much an impact on your overall position. Mm-hmm. That I would happily agree.
And we both definitely agree that you should not be holding that position just to have a big profit next to it.
Yeah. DJ Meltdown, thoughts on a good book for market mindset. The one I really liked was what I learned losing $1 million. Have you read this one? There's a guy, it was a pit trade, I think, and he lost $1 million on a trade, and it's all about how you deal with that and how you approach it. It's a very, very good book. I'd recommend that one.
My only day that I lost $1 million was the flash crash, and I was at 1.1 the next day, but I almost got sacked in the meantime. If Fab had told me, right, cut your book at 9 p.m. on the Thursday, I would have been done. Yeah. Lucky.
I should put it in the chat.
Right, good stuff. Well, that certainly gave us some content for the YouTube cut downs today. Good stuff. Thank you all for your questions. We've got Dylan Rattigan coming up with Angeline. It is 8:35. I'm going to be back for the US Open. Like and subscribe. Hit that like button. And well done, any of you that are holding Rolls Royce.
Very well done.
See you after the break.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways. Friends, welcome back, and the man you've been waiting for, Dylan Rattigan, is now live with me all the way from Milan. How are you, Dylan?
Never better, never better.
Oh,
it's a beautiful Monday morning, and I'm very, very happy to be seeing you. How are you today?
I am very good indeed. Have you recovered from the whirlwind that is Sosnoff and Rich McDonald and, of course, all those people in Milan that came to watch the show?
I have indeed. I guess it was a week ago today. Everybody did a fabulous job. The turnout was amazing. Folks came from all over the world, actually.
I saw
For
it was
the event.
amazing.
I mean, there were a lot of Italians, but also a lot of folks from all over the world. And those live trading events are pretty compelling to be able to sort of walk through that.
Right. And especially on the day that you guys did it was incredible because we were this side going, oh, when the bombs being dropped and stuff like that, going, what is that going to do to your event that evening?
Exactly. Turns out not much.
And then no rest for the week.
Tom actually used that point to amplify his point, which is that nobody knows anything because everybody was expecting all sorts of lock limit activity. And it just wasn't there.
It wasn't there. And in actual fact, the days after that as well, I mean, all the market was suggesting, if you looked at the moves, was that they seemed to just shrug it off, right?
Absolutely. And look at the move in oil over the last week.
Yeah. We'll get to oil in a second, but I just wanted to say no rest for the wicked because after that huge event, you then went from there across to Paris. Is that right? Is that where this picture's from?
Oh, look at you with the pictures. Yes, I went directly from the Sosnov event to my first ever Paris Fashion Week with Euphoria sneakers.
Nice.
So we spent the rest of the week in Paris. This is a celebratory dinner with two of my nephews in some glamorous Parisian location. I would argue there's probably not a more beautiful or more glamorous city. I think most people would agree. Paris, at its best, is quite a treasure.
Yeah. And something about the buildings as well. I mean, London's got wonderful buildings, but they're just a bit too close to each other. But Paris, it's just a bit wider apart, so you can actually appreciate them a bit more.
Absolutely, and just the way we all know Paris. I mean, in that sense, the way that the center is so open, the way that the relationship, with the river, and again, then the consistency of the architecture, and then the openness of the parks and all the rest of that. So it's quite a spot.
Right.
And it was a good beginning for Euphoria sneakers. We'll sort of get them into stores hopefully in the next couple of months. So this was a beginning, which was nice.
Friends, I have got your back. You can ask Dylan because I have been harassing him to be able to show that live site to you guys. It's almost there. We will put it on the Discord and also on my Twitter. Loads of our viewers also asking because they're loyal fans of this show. Do they get a Dylan Mates rate?
Of course. Well, that goes without saying. That goes without saying.
Amazing. Speaking of mates rates, let's take a quick look at the dollar and also the fact that are your goods going to be priced in local currency or priced in dollars? What is it going to be like? I'm going to just bring up.
Priced in euros. Priced in euros. The company is an Italian company. It's based here in Milan. All production and marketing and sales and everything. It's a euro-based business and a euro-based product. So, one of the frustrations with the business has been because we started as a U.S.-based company, and it became very clear that it needed to become a European headquartered company, which has made things slightly more expensive from an operating perspective as a result of the continued weakness of the dollar. But I'm sure we'll survive.
Yeah, and just whacking at my chart, we have really seen a big, compelling dollar weakness story here, especially given what we've seen in the previous week as well. Oil prices were lower, but they are seeming to come back now. But talking about the dollar, it's against major currencies. I've done some heavy lifting early on and tried to crunch some numbers so that we can just get a quick snapshot. It's at multi-year lows versus loads of major currencies, not just the euro, but also the pound, the Swissy, and also this coming at a time when we are looking at a close to around 90% chance of a September cut. So really baked in there. Is that also what is your expectation, Dylan?
You mean as far as the rate cut? I mean, I don't know. I don't consider myself to be smart enough to disagree with the way the market prices things. I think where I've been getting myself into a little bit of trouble, fortunately in pretty small size, but I continue to think that the dollar is a buying opportunity, although every time I think that it gets weaker.
It goes lower.
Take it where you take it for what it's worth. I do think that what we're seeing right now is very much a reflection of the apparent effort to continue to advance this massive tax cut and sort of this insane piece of legislation in the United States, which is seen as very bad for the overall value of the U.S. economy. And I think that what you're seeing, even as the stock, if we talk a lot about the U.S. stock market's, doing so well, and it's had such a good month, and the futures are up going into the last day, and whatever. But if you look at the stock market's return on a currency-adjusted basis, you can see that the value is being removed not from the market; it's from the value of the individual equities or indexes, but rather a compression on the total value of the U.S. currency.
But I'm glad you brought that up because, it is really interesting that, this dollar weakness comes amid the fact that we are seeing renewed optimism that we're going to get these deals, or at least, tariff talks are going to be perhaps kicked down the can, is going to be kicked down the road. But also the fact that, we have seen so many months of us going, clients and traders talking about concerns over the stock market, concerns about geopolitics. And really, if you look at the markets, they didn't really materialize. I have a Q2 2025 performance overview here, just giving a big bird's eye view of what happened in Q2. Had a 21% rise in tech-related stocks due to drivers like strong earnings, AI adoption, industrials as well, Dylan. Rose some 12% due to defense contracts and manufacturing. Commodities were rather mixed. I guess, the slide which you predicted, you said short oil happened in the last few weeks, but even financials, outperformed. Even financials, the cyclicals, we saw continued strength there. So what do you think the coming quarter is going to bring us, Dylan?
I think that we have to start to assume, the market is starting to tell us anyway, that the Trump legislation is going to come through in some fashion, that they're going to pass something. And it'll be some version of what's being bandied about. And I don't think that that's really a good thing for anybody, but it doesn't look like it's going to not happen. And so I think that in that context, I think that you have to kind of wonder, whether my desire to be long the dollar is really well founded. And you also have to sort of integrate that into the bond market from the context of deficit. There's this sort of absurdity of the American Republican Party that I don't even know how they presume to present themselves as conservative when they roll out budgets and tax legislation that looks like this. It's just very difficult to reconcile. And so I think that ultimately, right now, the penalty is being paid in the currency, but I do wonder whether the penalty will come back in the form of the bond. But even that, I'm not sure how that plays out. I think the expectation for the rate cut. I was talking to a big investment banker up in Paris last week, and I said, well, how do you explain this? If the Trump administration, if the tax bill is sort of chaotic, and if the tariff process has been pretty chaotic, how do you explain the performance of the stock market?
Yeah.
And his argument was, if it wasn't for the tariffs and if it wasn't for the tax legislation, the stock market would be much higher.
Yeah.
But what you're not seeing is how much better it could be. Now, that may be wishful thinking, but it was really the first time I heard somebody who was, a seasoned and connected and active senior financial professional not so much argue that the stock market's performance is one that is dismissive of the Trump policies, but rather one that that fails to show how much better it would be because of all the transportation tech, AI, all the basic prosperity that's around. That has the headwind of some of these sort of chaotic Trump administration policy making.
Yeah. Exactly. And, it's really interesting when you speak to these people before a couple of drinks and after a couple of drinks as well. Because I met up with some RBC people the last weekend, and their expectation is the markets are going to continue shrugging off anything that Trump sort of throws at them, because at this point in time, they've all had what is it when you kind of numb to the amount of chopping and changes that Trump's actually thrown at the market. So they're almost a bit, numbed by the fact that there's so many
exhaustion,
changes.
that would be the word.
Yeah, that's right, exhaustion.
That there's basically Trump exhaustion, and as a result, it becomes meaningless.
Yeah. So just putting and illustrating what Dylan was talking, if you whack up my screen, we're talking about fiscal pressure coming to a crazy figure of around $3 trillion of additional debt over 10 years, right? This is in addition to expected tax cuts, and further spending as well. And markets are still rip-roaring higher. The other interesting thing, Dylan, is that prior to all of this in September, and of course Trump 2.0, after that, loads of these fund managers would not ever talk about defense, at least not at dinner parties, and not talk about what they're holding. But now the mood's changed, and there's a new term. Do you know what the new term is?
What is it?
It's called tactical. Tactical. It's not defense that they're using. They can't use that D word, but it's tactical. When you get enemies to steer clear because your stick's bigger than theirs. Thank you. James obviously drank the coffee this morning. I haven't drunk my espresso yet. Tactical deterrent.
Deterrent.
Yes.
Sure.
So that's what. We're investing in tactical deterrence. So.
And all of a sudden, but again, look at the sector. I mean, this goes back. I think it was when the American vice president was in Europe a few months ago and made it very clear that the American commitment to European security was in deep review and questionable. And then we saw the big decisions come out of Berlin, and now we've just seen all those European defense contractors and British defense contractors, probably more significantly, performing the way that they are. And again, tactical deterrent is just the magic of a good vocabulary.
Exactly. But all means and points to the same thing. Right. Thank you so much, Dylan. It was great having you. Any big calls? I know you're still long dollar, but any big calls for the coming week? Viewers are asking.
No, but I'm just I think I just am remarkably satisfied by how effective the oil short was. I mean, time again.
That was a great call, your short.
So that was my best trade all last year. Every time it would spike, I would sell it. And I honestly was pretty nervous this time around. But
were you? Wow, you look really confident this side.
Well, I don't do you say I hide it. I hide it well.
Bigger beers coming online saying Rheinmetall. We'll look at that for you, but we have to let Dylan go right now. But Dylan, if you have any thoughts for bigger beers about Rheinmetall, do message it through. Thank you so much, Dylan. We've got all sessions coming up next, so all you guys out there, do not go away, because this is when you can take a position ahead of the US cash open. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell, and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome back to All Sessions. And it's so good to have Rich and producer Phil back.
I bet how it was last week.
I'm not going to lie, it was really busy. I had like moments when I was sat in Phil's thing going, I've got the graphics in, then going over there going, okay, and title that, and then coming here and going, oh, it's not easy without you, Rich. And I was like, oh, I have to get the guests of stock right now.
Yeah.
So it was, it was full on.
Shall we have a look at these all sessions then and see what is going to be going on?
Are you here just because of Nike? Is it self-interest?
Palantir, what happened to that on Friday night? Oh my goodness.
Jumped.
So it was down 4% on Friday, and then it was down 9% at the close. So a bounce back there, 4% today. You're seeing it trade 136. Goldman's up 3%.
Wow. I mean, banks did have a good week last week. Wells Fargo also up almost 2%. Walt Disney up 1.5%.
Yeah, that's a breakout, isn't it? I did not think we'd see that get up there.
Yeah. Disney, interestingly enough, had a ratings upgrade. Jefferies raising to buy from hold.
Is that what it is?
Yeah. So now they're expecting $144 from 100. So.
Then Nvidia 158 trading. Is that new all-time high?
I
don't think we've seen it higher than that, have we?
It continues to march forwards, which is causing your mate Piers to have kittens, because he keeps saying that
He's not short Nvidia, is he?
No, but he keeps saying that he thinks this story could be over. Why is it continuing to march higher? Is his view.
There it is, new all-time highs on Nvidia.
Look at that.
159. Wow. What else have we got? Where is that beautiful Nike? Has it given up some of its... It's given up 10 basis points of its 17% gain on Friday. So just back below the 72 level. And that is pretty much the only follow. So a really strong day. Markup yet again.
Just taking a look elsewhere, we've got some of these changes. I've been helping Andrew McKilvey and Steve as well. They want me to filter upgrades and downgrades for US stocks.
Good.
So I have created filters for that.
Let's see it.
Yeah, so it's on my icon. And so it's now filtering things like Disney, like Amris, Circle Internet Group as well. JP Morgan has initiated coverage with an underweight rating. Target price, $80.
And is this something we can get up? Sorry, because it looks like this puts something else
let's
up.
try and get this up for you. But as you can see here on top of my page,
Perfect.
yeah, KKR, I mean, that was early on, but, starting to filter some of the ones through, which I'm also going to put on my Twitter page, because then you can access that as I get more coming through. We also have this SOS campaign.
Yes.
Yeah, right. I'm going to bring up the pages whilst Rich talks us through it. Here we are.
The SOS campaign, Save Our Stock Market. So this is IG saying that, look, if you look at cash returns over any 20-year period, then they unfortunately underperform if you were invested in the market. So why have we got cash ISAs? You know, should they be reduced? I've seen people say reduce them to 10,000, reduce them to 4,000. But there is something that needs to be done in this country to get people into investing, to learn about investing and invest in stocks. So it's time to back our stock market and save our stock market.
Absolutely. There's also this other school of thought, Rich, that, you know, rather than tinker with the cash ISAs, and I talk a great deal about this with Sophie, surely if you tinker with that, but you don't support it with education, like shows like this, then you're still not going to get the, you know, effect of people wanting to be, you know, invested, wanting to, you know, go into the markets. And this is the difference between our market and the US market, right? Everyone's mom, dad, grandma, grandpa, they all talk about what their, you know, what exposure they've got, what's in their portfolio. You don't have that so much here.
It's really sad. It's 61% of Americans are invested in stocks. Here, it's less than 30%.
Yeah.
So really, you know, the gulf, and which is incredible considering, you know, the two nations are so similar in, you know, being developed in education.
What do you think it is? Do you think it's a pioneer spirit? So the Aussies have higher risk appetite as well.
Yeah.
You know, that's why we offer more leverage there. IG customers. Singapore too, but Singapore has the added benefit of, you know, leave your money here.
I think the obsession with property in this country hasn't helped.
Yes, I agree. I totally agree with that, because nowhere in a major economy is one's portfolio as deeply sort of rooted in property as here. It's because we've got an open market, really.
Well, and because we're an island as well, so you're gonna, you know, really, it's certainly, you know, it's all the fundamentals have been there, with regards to property in the last 25 years, but maybe not so much now. Kensington, Chelsea down 15%.
I know. I saw an article saying, you know, non-doms, you know, clearing out time to get your Kensington flat, Richie Rich. Here we are. You can find this on Instagram. I've also popped it up on LinkedIn. You can also find it on LinkedIn. I have reposted this so you can easily find it, but also on Twitter and also on Facebook. Yes, do have a look at that, because it is time to back British business.
Right, so take a look at tier 2 stocks then. We've got Plug Power up 4, Alcoa up 3.7. That might just be a bit of a widespread there. Robinhood has gone absolute gangbusters, up 3%, 85.60. What an incredible performance that has had. Talking about investing in the US, that's you know, a real winner there that you see from the back of that. Upstart up to 64, having traded 49. And then MicroStrategy trading $388. Where is that compared with its highs? Yeah, it briefly touched 400, but for recent highs, let's have a look at this. MicroStrategy down from 420. So Elon Musk's favorite number, 420, back down to 389.
Nice. Just having a look at to see whether Juniper, let's have a look. Is that? No, it's not. All sessions. Just having a look. It's pretty risk on today still. Whilst you were away, we were absolutely gobsmacked. You heard Dylan and I talk about, you know, the fact that markets just basically shrugged off the geopolitical uncertainties.
Absolutely.
And it was, you know, something behold, the volatility crushed really. Matt Arber, Elliot, and I here going, wow, we're seeing volatility drop even lower. It's
That was it was a really good few days to be with Sosnoff actually, because as soon he said, "Oh, Vol's just going to get obliterated," was the first thing he said. So yeah, interesting to get his take on things, kind of from the horse's mouth. But 6,195 on the S&P 500 now.
It's incredible, right?
Whoa. Where do we top out, Ange? What are your lines on the?
So
charts here?
you did that fantastic short a couple of months ago about if you take this into account, if you think earnings going to do this, right? If you think the trade tariffs will materialize, it's a fantastic short. If you haven't seen it yet, it's on our YouTube page. Rich goes through all the different scenarios, how to calculate it. So I watched it and then I did take a view. And with the positive, so end of this year, I was looking at 5950, right? And we have surpassed that. Look at it.
Popped above now. I wonder if I've still got that somewhere. So yeah, take us through what the lines are on the chart. Why there's the golden and the blue one.
So the 5,950 is just purely, back when you did that piece, and I thought that earnings were going to still, be relatively good. But I then did take into account, Aaron was saying that, things are heating up in the Middle East, and we could have, a situation with Iran before the end of the year. And then the tariffs. My view is that Trump loves tariffs, and he wants to carry it through.
He's always talked about it for 20 years.
Yeah. And at some point, he is not going to be happy with the taco, and he's going to want to show people he means business. And so that golden line is where I thought we would end the year on the S&P 500, based on that thesis. What was your number?
Well, let me go through what the blue line is, though.
So the blue is just very simply where we saw the S&P 500, top out in February this year. And that is just an indication to me where we could see breakout territory.
Right.
And indeed, look, we have solidly, broken out.
Yeah, so here's the old spreadsheet. You can see the blue sky of 280 EPS figure is 6,160. So that is, we just topped that on Friday. That was my bull case, absolute bull case was where we are. So, that's going to be an interesting one. Are we now expecting higher than 280 EPS? No, we're not. The revisions have actually been lower since the last set of quarterlies. So the market's gone higher and earnings estimates have gone lower. For me, that still feeds into my short calls, and I'm relatively happy with that. Not happy with the P&L, as Chris and I were talking about earlier.
That was a good argy-bargy there.
Yeah.
Do we have the poll results, Phil? Did you show the poll results?
I didn't even want to rub that in his face. Producer Phil seemed to think that 63% against 36 was inconclusive. I'm not sure if he's watched referendums and any election result where 51-49 is conclusive.
Producer Phil's quite young, so maybe he hasn't voted, maybe...
Or didn't study statistics.
Did you vote during the Brexit referendum, Producer Phil?
Stayed up all night to wait for it, he says. What did you do on Brexit night?
Can I be honest? I cried. I cried because for those of you that know me very well, I have a huge number of people and relatives still in Asia. And the night before the results, my mum is an NHS fully trained professional, and she has left me because she's now retired in Asia, but left me here with a huge amount of NHS friends, as you can imagine. So my dinner was never great in the Ong household. I could never have been a medic, even though I had the results to do so, because it's like, hey, let's talk about that hip surgery that we're going to do tomorrow. And my mum used to get all these videotapes of the surgery because you watch it before. Like you watch the show before you trade, right? Same thing. So I was invited to an NHS party the night before. And you know the NHS, just guess what the demographics are in terms of people who've come from abroad to work in the NHS.
From abroad or from Europe?
Just abroad and Europe in
Well,
general.
abroad, it was a good thing, though.
It was a good thing. But the early statistics, I also know the head of workforce for the St. Thomas's and King's and UCL. And they were saying to me at this party, there was a lot of anger that actually the majority of NHS people are going to vote to come out of Europe. And then when you delve a bit deeper, they weren't angry with the Europeans. They're actually like, you're kind of like going, but those people that you're complaining about, they're not even European.
Right.
But there was this anger. We need to blame someone. We need to blame someone. And so I came back, and the next following hours, I had all these messages from around the world going, no, it's not going to happen, is it? No. And I finally fell asleep for 2 hours. Bearing in mind, I had to be at work at 4 a.m. the next day. And I think I still have a picture of the screens, which I took for posterity. My inbox WhatsApp was full. Everyone was like, is this a joke, Angeline? Did Britain actually...
Our stories are very different, Angeline. I was in a nightclub.
Were you? Oh my goodness.
So
Did you feel the vibe there of how it was going to pan out?
Well, no, I absolutely did, because the doormen were both Romanian. And so we knew the results weren't going to be out till 1 a.m., 1:30 that actually counted. So my friends and I were like, well, we may as well go to the nightclub, because you know, what else are you going to do till 1:30 in the morning on a Wednesday, I think it was. So we was chatting to the door guys. And the door guy said, never happened, never happened. Of course, it's going to be Remain. And I said, guys, so far, it's actually quite close. That's never going to happen. I said, but how are you getting the results? He said, oh, text messages. I said, I'll tell you what, I live opposite. I'm going to drag my TV across to the window and put my TV in the window so you can watch the results come through. So the whole of the outside of Raffles on King's Road was standing up watching my living room window as the results came through. So anyway, he says to me at 2 a.m, I said, oh my goodness, I do not believe it. It's been a vote to X. No, he says, that's not going to happen. I said, no, it has happened. Like it, you know, the results now, it's like a huge probability. On Betfair, it was like 1.1, so I knew it had happened. And he goes, no, I bet you £200 that it's Remain. And I said, I can't take your money because I know it's going to be Exit. And he said, no, I bet you £200. I said, okay, fine. Boom. So we bet. So an hour and a half later, I was coming out the nightclub at 3:30, and he handed me £200. So that was my Brexit, and then stayed up till 8 a.m. trading.
Yeah, I mean, it was a remarkable few hours. But you know, it's it's one of those times when you can kind of look back and think, look, no algo, right? No algo would have predicted this. You know, you just have to know where to listen. I mean, it was very clear the night before that it was going to be, we're going to exit. So.
You mean in your...
The party.
Yeah, that's like, so I was in, for the first Trump election, I was in a hostel in Costa Rica.
A hostel?
A hostel.
Not your style.
And I've travelled the world. Hostel was me.
4 seasons.
On my redundancy money from Credit Suisse. And I went on the zip line with 2 American girls. And I assumed American females, well, obviously they're going to be anti-Trump. They're going to be voting for Hillary. No, staunch Republicans voting for Trump. And that's when I kind of realized, I was like, ooh, this is probably a bit closer than the polls predict for Trump's first election. So was ready for it. Again, stayed up all night trading.
Yeah, you know when I realized? When I think it was CNBC went to a pub somewhere in the US, and there were all these like Mexicans, Latinos, And you would think that they would be, but no, they were pro-Trump. Okay. Whoa, yeah, exactly. Speaking of which, just want to update you because my filter is continually starting to drop stuff in. It's taken a long time, this. It was Andrew McKilvey's idea. So, you know, kudos
And we'll have,
to him.
so we'll
So we
have
got,
US upgrades every morning.
Yeah, and we got Circle shares. So Circle's not all sessions, but I can tell you guys this, Circle shares, this is pre-market indication, falling 2.5% as brokerages initiate a coverage after the IPO quiet period expiration. So
should we just have a look at that one? I'll get Circle up and see, because it has been absolutely incredible IPO. Let's get this on put it on the 4-hour chart there, and let's see it since this one started. Absolutely gangbusters from $80, peaked at 280, and now at 180. Is that the right Circle? Yeah, Circle Internet Group.
that is the correct one. Yeah.
Go.
I know, it's a really big move, right? I think lots of people, there are lots of hedge fund friends of mine who, you know, they were in and said they'll come out right after. And look at it over there. There's a reaction for you. But yeah, loads of other things that happened whilst you were away. So we were very missed. Discord was really popping. How many members now maturing? Let us know. Also, whilst the hostilities between Iran and Israel were going off, Israeli stocks were up too, because they were expecting, you know, this to be quite contained.
Yeah.
We spent a lot of time whilst we were away. I was showing the viewers how to look at marine traffic. Because when it first started...
of course, through the strait.
Yeah. Everyone was like, Ange, is it going to be a problem with, you know, straits? And everyone was like, I don't see any problem at the moment.
Yeah.
And like, how do you know? Well, take a look at marine traffic.
Yeah.
Matt Arbour found that quite funny because he was like, Ange and her maps. So yeah, Bigger Beers and David Boise joining the chat. Boise saying, forcing a Romanian doorman to watch what he's been voted.
He's actually still the doorman at Raffles today, so what, 9 years later?
How much money has he lost to you?
No, I did give him it back. About 2 years ago, I went back and said, I feel that was unfair, because I had to get a big group into Raffles. So.
I had one person who is lovely, like soul to the earth. My friend's mum, also NHS, her entire life in the NHS, right? I mean, this is like someone that if you cut, you know, this area and then you get beneath the skin, it still says NHS. And she came back, I voted to leave, and all this are kind of like, and my friend who is, you know, in British Indian said, you know, you are Indian. No, I'm British, but you know.
She was Welsh.
No, she is Indian. She said, no, I voted to leave. So I was there just drinking heavily, because at this point at the party, I was kind of like slightly depressed, right? And the daughter's like, Mom, because, you know, the mum's lovely. She's like, you do realize that you're ethnically Indian? No, I'm British. Yes, but you are... Anyway, long story short, it was an interesting night, which I don't want to remember right now. Bigger Beer saying, I think it's because immigrants had to do the process, are resistant of others getting a shortcut towards residency, citizenship in the US.
All right, who's ready for a trade of the week then? What's your guess? What do you think it's going to be?
I think this week is going to be still a good week to potentially short the dollar, because we've got jobs coming up.
What do you think Axel will pick, though?
Ooh... accent.
Yeah, Boise. Yeah, I'm glad I didn't try that one.
I don't know. He chose oil last week, which is good. And he did DAX, I think, the week before. So,
I would guess he would go for one of the big indices.
You think? NASDAQ.
Yeah, it was yen last week. Dollar yen last week.
Oh, was it then oil the previous week?
Yeah. Right, well, we have Axel waiting in the wings. Who thinks? Bigger Biaz thinks it's going to be silver or copper. Interesting. But let's not wait any longer to find out. So we'll be back in 2 minutes with a changeover. I'm off to record a podcast. We got a very interesting podcast coming for you. A little teaser for you there. And also, we've got coming up on tomorrow's show, Piers is going to be in the house. So we shall see you tomorrow. We'll leave you in the very capable hands of Mr. Axel Rudolph.
So any tech questions, Piers, do ping them through so we have them ready for him. Plus, we have the Pat Cash. Can we talk about it yet? Yeah.
See you after the break.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello and welcome to Trade of the Week on the last day of June, 30th of June 2025. And I'm going to talk about gold, which nobody mentioned just before. So let's look at the gold price. Let's look at the chart straight away. Why do I want to look at gold? Because I do think, and I might be completely wrong here, but I do think that we've seen a corrective move in gold coming down from the mid-June highs. It's a sort of zigzag correction, a 3-wave correction down here. And basically, we have held above the previous low from late May, which comes in at $3,245 per troy ounce on this daily financial bed. So because I believe that to be corrective, it is possible that now that we've seen this bullish candle forming, I mean, it hasn't formed yet. We haven't seen a close today, but I do think that we will see a close here above Friday's high and Sunday's high, sorry. And also above the low seen on Friday. So for that reason, I think we could go long gold here from a technical perspective if you believe this to be a correction that has now held above the previous support. And that basically would be my trade of the week. But before I summarize it, I'd like to talk about last week's trade of the week, which was to go short the US dollar versus the Japanese yen. And what we did there is just follow the trend. And you can see we were heading up, and everybody was looking towards further upside. And I said we should perhaps go short around 147.50 to 148. The high was made literally at 148. and then we came all the way down again. Why did I do that? Because we were approaching previous resistance, as I showed you. We were still in a downtrend, and also fundamentally, I still expected the Bank of Japan to hike its rates and the Fed to cut its rates. And this is basically what the market's now thinking as well, because we've come off all the way from that area around 148 down to, at the moment, 144. If you want to, you can cash in your profits here, or you can let it run down towards the 140 area, which is my longer term target. Either way, what I would do personally, but obviously I'm not giving any advice here, is move my stop loss to my entry level. So basically you went short at 148, move your stop down to that level. So it's in theory a free trade. And you're not risking anything on that position anymore. So that's what I would do. And then also I wanted to mention that we went long cable, you may remember, on the 19th of May. So all the way down here, back here when we broke through this resistance line, and we had an upside target 148.50. It didn't do much for quite a while, but now we've got another nice upswing, but that is starting to lose upside momentum. So maybe it's a good idea to sort of cash in your profits around 137, because after all, we went long, I believe, around 133 something. So that's not a bad trade at all. And we did come quite close to getting stopped out at our entry level, but in the end that didn't really happen. So yes, that's what I would do on this previous trade of the week. Coming back to today's trade of the week is to go long gold with a stop loss below the, I believe, the 19th of May low, I think it was, the 15th of May low, the mid-May low at 3,000, no, sorry, I'm talking rubbish here. I'll start again. So this week's trade of the week is to go long gold with a stop loss below the 29th of May low at $3,245 per troy ounce, and an upside target around the 3,400 to 3,450 area. Right. Thank you very much for watching Technically Speaking now, and I've got loads of questions, so let's go straight into it. Obviously, as I always say, I am just analyzing the charts as I see them, so this is not an in-depth analysis by any stretch, and I'm also obviously not giving any trading advice or anything like that. It's up to you to decide what you do, but I'm just giving you what I see from the perspective of somebody who's done and dealt with technical analysis for over 30 years. So let's get at the first one here, BMEB. I've been asked to look at this one here. Well, what we can all see is that we held at support, as you can see here. We held at the previous lows going back to February of this year and also March of this year. And this is why I love technical analysis. I mean, even if you analyze the markets fundamentally, choose your levels where you might want to get in or out based on the charts, because that's where the last price action in the past showed you where the demand and supply was, and whether the buyers or sellers were in control afterwards. And you can see here, every time we went down to the support areas, the buyers then finally managed to push the underlying asset up. So here what we're seeing is just a small up move, but as we just saw with gold, what we're actually seeing is the inverse, is an ABC on C. And because it's so steep and it's taking out I don't know how many candles here to the upside, the momentum is very much to the downside. Plus, if you look at the trend's your friend, it's still pointing lower. So if I were long from a longer term perspective, I would, excuse me, probably place my stop loss below these lows going back to February or March. If I were short, I would probably either tighten my stops or place the stop just above the high seen last week, because the trend is still down. And as long as we stay above that high on the daily financial bed, 284.50, the trend is your friend, is still pointing lower. So I wouldn't be surprised if we were to sort of sideways trade and drift back down again towards this support area. And then the question is, can we hold there or not? So this is a sort of very short-term analysis. If you were to see a break above Wednesday's high, and I'd like to see also ideally a break above the 6th of June high, 294.50, then perhaps we could gradually rise again as we did back in April. But right now that looks to be less likely than further downside, purely based on the technicals. Then we've got another one you want me to look at is Mubico, and here we have again a downtrend, as you can clearly see, grinding low. And this is the problem with trying to pick a bottom. You see, every time you think, oh, it might actually bounce back, it goes down again another leg, and then, oh no, it's actually bouncing back quite well this time around, and then you get this huge hit. And when you get things like this happening, it's very difficult for the underlying asset to come back again. There has to be a lot of bullish momentum. There has to be a fundamental shift, basically, for that asset price to change. And you can see here, every time we go up, we actually make a lower high and we come off again. So I wouldn't be surprised if that were to continue, if we were to fall through Friday's low. We may see further downside, as we saw here, for example, at the beginning of June. Take us back down towards these lows here. So for me, the downtrend is still very much intact, as long as we stay above the 3rd of June high here at 32.87. And that would need to be taken out on the daily chart closing basis for us to form some sort of bottom information. But even then, it will probably take a long while for us to come back to where we were trading just a few weeks ago in April. So for me, the trend is still pointing downwards, and we may actually see further downside take us longer, because you can see here the trend is clearly pointing down. Then we've got, so yes, apparently I've been told Mubico's got a new CEO. Maybe that person can change things around. But as I said, technically speaking, from a longer term perspective, you would have to rise above the reaction high you've seen in the middle of April at 61.90 for us to really form a bottom. That's a long way away. And as I say, from a trading perspective, perhaps if you take out the early June high on a daily chart closing basis, you might form a bottom information here. But right now the transient trend is still pointing down. Rheinmetall, always a very popular stock. Had an excellent performance as of late, and you can see here that we are currently struggling a bit after this lovely uptrend here that we've seen all of this year. We are trading sideways. We had this again, can you see this ABC correction? So move down, up, down. So you're looking for these zigzags, and quite often they're just corrective moves, and then we have a resumption of the uptrend. Now here we have also a zigzag, so it's possible that this whole correction is part of a bigger one, and we may actually go down again and then up. But right now, basically, as long as we stay above the low we saw last week, which was marginally below the low seen on the 9th of June, technically speaking, for me, we're just trading a sideways trading range in a medium-term uptrend. We have a series of higher highs and higher lows. So for me, Rheinmetall basically is still a bullish trade. If you're long here, your stop would probably, if it's a tight one, be below the low seen on the 23rd of June, last Monday. That on the daily financial bet is just here at 165,125. If you have a longer term perspective, then the low is actually the April low that we saw with Trump's liberation, or so-called Liberation Day. As long as we stay above there, the long-term uptrend is very much bullish. So how far can we go actually with this uptrend? And if you go into the weekly chart, you can see here that we are close to all-time highs. We had a stellar performance, as I said before, as of late last year. And basically the trend's your friend. So there's a higher probability for us to make new all-time highs. We could head towards 200,000 on this daily financial bet, probably once we break out of the sideways trading pattern. So when we will do that, well, basically if we rise above Thursday's high here at 186,450 on the daily financial bet, then very likely we'll also take out the all-time high that we made at the beginning of June. So yes, still looking very good. Then Nike, if you're interested, look at the website, the IG website. I wrote about Nike, a preview ahead of results last week. Have a look at that. It's on the website, or type my name in with IG and Nike, and you can see here that we had a nice spike higher. So you can read that analysis, even though it might be slightly out of date now. But we can see here that we now have taken out this previous resistance area, these previous highs going back to the middle of May. That in itself is bullish. Then Thursday's close above that resistance area with a nice big up move is bullish, and especially since we've seen follow through to the upside on Friday is also bullish. So here I would now target the high seen in February, late February of this year, and that on the daily financial bet was at 8,244. So likely further upside to be seen. We may lose, a little bit of upside momentum because we're sort of trading in this resistance area here now. But basically, once we've taken out the high seen from the 21st of March of this year, which was at 7,681.5 on the daily financial bet, then it should be plain sailing towards the February high. The question is how long it will take us to get up there. But clearly, we've had a shift. We've had a shift from bearish downtrends, as you can see here on the weekly chart, a very long-term downtrend. And we're seeing encouraging signs that that downtrend may be coming to an end. If you look at the downtrend line, can you see here? If I wanted to draw my downtrend line on here, had I done it this way, I would have had data coming through this high here. So that's incorrect. Can you see here? Because we've got data coming through here. So you can't do that. So what you do in that case, you basically draw a resistance line between these two highs here, there. But that doesn't give us much because it's very much higher. So what you can do is you can have an internal trend line within the longer term downtrend, which could be this one here. And you can see on the weekly chart that what we've managed to do is now to break through that resistance line here and manage to close above it on the daily chart, on the weekly chart closing basis. So that is actually quite bullish in the short term at least, and that's why I believe that we're going to see further upside with regards to Nike in the days and weeks ahead. Then General Electric is another one. Lots of questions today. Let's have a look at what that chart looks like. Why is that not coming up? General Electric. That's probably not the one you wanted to look at, is it? Portland General Electric, GE. GE, I can't find it. General Electric. Okay, we'll come to that one in a second. Let's look at AMD, another interesting stock. AMD, and basically what we can see here, again, technically speaking, on the weekly chart, is a trend line break. Can you see here? We basically broke through this downtrend line, managed to rise just a couple of weeks ago above this previous high from the middle of May. That is bullish, then had further extension to the upside here, take us towards current levels. So that's all looking pretty good. And basically the next upside target is you just go to the left and look for the last reaction high, which is an important one. You can see here with this ABC zigzag correction again. You can see why I like that pattern, because quite often markets resume their trends after this sort of pattern. And we can see that we are heading towards now the 7th of October high from last year, which on the daily financial bet comes in at 17,495. So probably further upside in store for AMD. You can see here a very healthy uptrend. We've had a consolidation phase. We've broken up above these previous highs, all of which is bullish. Short term, sure, we may lose a little bit of upside momentum here if we were to be capped by Thursday's high. But you've got pretty good support now. Can you see here, this whole area here with the low seen back in November of last year around 13,976. And in the worst case scenario, going back to the lows here at the end of November towards 13,297. All of that should act as support for the AMD share price here. And for me, the trend is bullish. We've broken through the long-term downtrend. We have an uptrend in place since April of this year. And basically, it is looking bullish to me. Another one is Greg's. Let me just see what Greg's looks like. Again, interesting on the daily chart. We still are in a downtrend. We've had a nice move up, but can you see here again from the pattern, that could be construed as an ABC correction. Again, you know, a leg up, A, B down, C up. Now, obviously, that's quite extended. But can you see here where we failed on the 20th of May is basically with all these previous highs were made. That resistance area capped the upside. And since then, we've just been drifting downwards. And we've fallen through this uptrend line here. So what are we seeing in the short term is basically a bounce off that low on the 23rd of June. And that low, can you see here, was made at this support area here, which is why it's always important to look at previous highs. If you see a cluster of those in the future, they can act as support going forward. And this is what's happened here. So basically, Greg's, we may be trading sideways. For upside momentum to be seen again, you would have to take out the high from Tuesday of last week on the daily financial bet, 1,981, for us to head higher again. You would also need to have a stop loss, in that case, probably below the 23rd of June low, which is 1,878. If we were to fall through that low, though, it's probably just a continuation of that downtrend. And in that case, we may actually slide further again and perhaps even retest the early May lows, which were made around 1,784. So right now, we're still in a downtrend. We need to take out the highs from last Tuesday for us to change that. And as you can see here, we had a resistance line. Yes, we've broken through it, but I want also, for me, a resistance line break is not enough. What I like to see is also a break above the previous relative high. So what I mean by that is the following. Can you see here we have this resistance line, we broke above it, we closed above it. So that's the first indication that the trend may be about to change. But what I want to see now, where's the last reaction high? Is this one here. I want to see a break above here. And on the trend line break, I would have gone to the left and seen this reaction high here. So that high here, 2018, would have been the line in the sand for me. If we break above there, then you can have a pretty good probability that the previous uptrend has actually resumed, and that was just a correction against that uptrend. But in the short term, you need to take out Tuesday's high first before you can have that pattern happening on your chart. So that's basically what we need to look at here. I've also been asked about Coinbase, so let's look at Coinbase. And you can see the all sessions chart here. Coinbase obviously also doing extremely well since April. Huge acceleration to the upside here. We've got really good support now. Can you see here in the short term, the low we made on Friday was exactly more or less where we made the high in December. Again, previous highs acting as support. So this whole area, if you make it a cluster between these highs going back to November of last year, all the way down to, let's say, 34,148.5 on the daily financial bet, that should act as support in the short term. But even if we were to retrace in the medium term, like we did, for example, at the end of May, beginning of June, since we saw this really strong acceleration to the upside, the correction is likely to be relatively shallow if there is going to be one. And we've got support going back to the late January and also the mid-February highs. And these come in all the way down towards, let's say, 31,062. So there's really good support there. So I wouldn't be surprised if we were to short-term maybe trade a little bit sideways. But if we do come off and slide, the declines against the recent strong trend to the upside are probably buying opportunities more than anything. If you're short a Coinbase, then obviously your stop is the last relative high here, which is the high from Thursday. Once you go above there, it's very likely that this previous trend is going to continue. And if you look at the monthly chart, you can see that Coinbase just basically made a new record high above its high seen back in November of 2021. So that is also bullish for the Coinbase chart, at least in the short term. And you can see here that we're in a very clearly defined uptrend. So further upside more likely than any downward reversal here. Then let me just also look at, shall we go back to GE and find GE? If you want to help me find GE, because I don't know, I can't find it either. The gallery can't find it. So whoever asked the question, could you please send me the code and then we can look at that. But in the meantime, let's look at markets which are making new all-time highs. The NASDAQ, the S&P 500, all of these. I mean, should you buy them now? Well, basically, if markets make new all-time highs, nobody really wants to buy them. But yeah, longer term, it's probably a good idea to buy even into all-time highs. The only issue is where's your stop. So if you're trading, basically, you can see here on the daily financial bet of the Nasdaq 100, we've had 1, 2, 3, 4, 5, 6, 7, and we're currently seeing the 8th consecutive day of gains. Now, obviously, we have Sunday trading on this chart included because it's an all sessions chart, but still, you can also see that we're starting to lose some upside momentum, that the candles are becoming smaller. So I wouldn't be surprised if short term we may see minor retracements, but those would probably represent buying opportunities. And you can see also that if we were to come off the previous record highs going back to February of this year on the daily financial bet at 22,240, that should act as support together with the high seen here on the 11th of June at 22,071. So we've got really good support areas coming in if we were to come off a little bit. But yes, the trend is your friend. We're trading in all-time highs. And the uptrend is a long way away. If you look at it now, if I sort of take it from the low here, you can see here that we are in a very healthy position with regards to the Nasdaq 100, with regards to the S&P 500. And obviously, with earnings season coming up in about a couple of weeks' time, and perhaps the impact of US tariffs on the US economy, on employment, and also on growth in general, perhaps being felt more than what's come through the data so far. Who knows what will happen to these trends? But clearly the market at the moment is still very much looking forward to more upside. We've got a possible trade agreement between Canada and the US in the pipeline, which has helped us again today to push Asian markets higher and also European markets. And on the back of that, you'll probably see the US markets later on today also continuing to advance. So let's go back to GE Aerospace. There we go. All sessions start. Thank you very much, David. And here what we can see is the share price trying to break through its previous high, the 6th of June high, a very clearly defined uptrend, a very healthy uptrend, as you can see here, a series of higher highs, higher lows. We had our short-term consolidation here. Again, can you see this zigzag down, up, down, and then we continue to go higher. So all of that is bullish. And if you look at the monthly chart, you can see we're very quickly approaching our record high going back to 2016 here on the daily financial bet at 26,580. So that is, isn't an all-time high. Sorry, that's the high from 2016, but the all-time high was actually made earlier than that, 2007. Oh, even earlier than that, back in 2000. So anyway, we are approaching this major, or we're testing this major resistance area between the March and the December 2016's high, with the July high being the highest of those different monthly highs. So it is possible that we may lose upside momentum. Why am I saying that? Because we're approaching this key resistance area. That's probably why we came off at the beginning of June, but we are now retesting that high, which is looking, bullish. It's good. But if you look, and that's why I have my relative strength index at the bottom of my chart here, can you see what happened at the beginning of June? What we've had is a very healthy uptrend, a series of higher highs and higher lows. But if you go and look at the relative strength index, the oscillator based on this upward movement, you can see that that high here that we made on the 6th of June made a lower high compared to the high we made in the middle of June here. So on the chart, we're making higher highs. On the oscillator, we're making lower highs. And that's an early warning signal that in about 70% of cases, you do get at least a short-term retracement against the trend. Now, sometimes it leads to a complete reversal of the trend, but that's quite rare. Most of the time, it gives you an opportunity to basically buy into that underlying asset again at a lower price. So here, this is exactly what has happened with regards to GE Aerospace. You could have then bought it again here towards 23,000 on the daily financial bet, which basically was also where the previous low was made. We just marginally went through that support, but then closed above it on that day. So what can I tell you now? Well, look at the high we made on Friday, That high intraday was above the previous high that we made on the 6th of June. But on the daily chart closing basis, we did manage to close above it. Now we're going to try to do so again today. And if we do, fine, that would indicate that further upside is in store. But as you can see here again, the relative strength index is once more below where it was before. So we have negative divergence on the chart, even though we're making higher on the oscillator, even though we're making higher highs on the chart. That possibly tells me that the upside momentum might fade away because we're approaching that key resistance area that I told you about with these highs going back to July 2016, perhaps acting as resistance and perhaps capping the upside in the short term. So if you're a long-term investor, look at the daily chart, see if it does continue to go higher, because that might well be the case, because after all, we've had a healthy uptrend since April. But if you see it sort of struggling, especially if you see it coming down below the 12th of June low here on the daily financial bet at 22,599.5, then it's very likely that we are seeing at least a short-term correction against that major long-term uptrend. So just be aware of that. Because of that negative divergence, I'd be slightly cautious or move my stops closer to the market than I might have had them before. Right, EasyJet. Yes, EasyJet. I used EasyJet yesterday coming back from south of France. Hence the tan or the sunburn in my case. But anyway, you can see here the EasyJet share price just bubbling along on the monthly chart above its low here made in October of 2022. Not much happening, but it's getting more interesting because every time we try to take out the April 2024 high, which we did back in December of last year, we actually come off again. And now we did try to do so again in June of this year, can you see here, and failed once more. So this is the key resistance area from a long-term perspective, because if we were to manage to take that out, we would be forming a bottom, and the EasyJet share price could be heading back up again towards the February 2022 high on this daily financial bet around 729. So that is possible, but we need to take out this previous high. This is one at 590, and then we've got 590.9 on the December 24 high, and again 590.9 on the April 24 high. So if we look at the daily chart, what we can see here is that we tested that high several days in a row, failed, and then came down again. And then we had, again, this pattern, down, up, down, this ABC zigzag pattern. And now we had a really good session here on Tuesday of last week. So that is short-term positive, because basically we've had a long handle to the upside, which basically in one day took out the previous 4 days. So that's always positive. And now we're just consolidating. So basically, as long as we stay above the 23rd of June low, which was made on the daily financial bet at 500 or so, as long as we stay above there, also round number psychological support, we should continue to trade sideways with perhaps a bullish bias. And we need to take out, though, the highs seen on the 24th of June at 548.8, let's say at 549 on the daily chart closing basis, for us to then resume this uptrend we've been in since April of this year. So that's what I would like to see technically happening before we can be more confident about the EasyJet share price. And then JD Sports is another famous one that we look at, I think, nearly every week. I think somebody is long JD Sport, and now feeling much, much better than last week or the week before, because what have we seen since then? You can see here we've had a very nice up move, 4 consecutive days of rising prices. This is healthy momentum to the upside. We've also on the weekly chart, you can see here, broken through some resistance. And you can see that we've broken through that tentative downtrend line and closed above it on a weekly chart closing basis last week. That is bullish, and it's likely that we will be heading towards the mid-May high now on the daily financial bet at 94.91. That's our next upside target. If we take that out, then we would really be forming a bottoming formation here and could head towards the 110 area or even higher. So let's look back at the daily chart and see what we're seeing here. We can see this trend line break here on the previous highs. this upside momentum is likely to continue. If you are long, your stop on the short term at least would be below Monday's low at 70.18. Because a fall through there would mean that this is not just sort of, again, an ABC zigzag correction, but something different. But given the strong upside momentum we've seen here over the last 4 days, I would really expect that to continue and further upside to be seen. Where's support? Well, we've got support here around the previous highs, around 85. We've also got the 10th of June high here at 83.58. All of that should act as support. Basically, any support at the short term at least should help this uptrend to continue in the next few days. And as I say, my short-term upside target is the mid-May high here at 94.91. Then we've got the 110 area to look forward to. And yes, JD Sports may finally be changing direction. Also, I'm bullish because can you see here, back in April, we had 2 strong updates, but that was probably more to do with Trump's Liberation Day and so forth. And then we had a gradual advance here and then big candles to the downside. But now we've got big long candles to the upside. So clearly the momentum has shifted. We've got more thrust to the upside and we've also changed direction. We're pointing higher with our candles, all of which is short-term bullish. And basically, the question is, what would be a good point for a retracement to buy? Basically, if we look at Fibonacci retracements, we can see here that we take the low to this high here, and then if it's a minor retracement, it could take us to 38.2 here, which would be all the way down here. But given the strength that we've seen so far, I think even the minor retracement towards 85.40 or so, because of these highs here, might be another buying opportunity if you get there. Or if we were to fall further towards the 20th of March high at 81.77, and this one high here on the 10th of June at 83.58, that whole area may represent another buying opportunity. But given the strength of the upside, quite frankly, if we make a new high above Friday's high, it is more likely to continue to head higher. You might not even get that opportunity of a minor retracement in that trend. So thank you very much for watching Technically Speaking with me, and I hope to see you again next week. Goodbye.
Can we get much higher? It's Thursday, June 26th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilias Pivek in San Francisco, Thomas Westwater in Chicago, taking you through the rest of this trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform on tastylive.com, welcome. Thank you for joining us. Come over to YouTube. Tell us what you think of this action, this listless melt up in markets. Low volumes, low volatility to find the day. The S&P 500, does it clear a million contracts traded? No, sir. Or ma'am, whoever's listening. But we do see a push here in the triple Qs and NDX, two fresh all-time highs. NASDAQ futures barely a few hundred points away. The S&P hits a fresh June high as well. We see here now it's at its highest level since that February 21st PMI growth scare, Ilya. As you make your way around the market, bonds, they are trading up, and they get a little bit of a kick in the pants today, treasuries across the curve, when the Senate parliamentarian comes out and says, you can't cut Medicaid the way that you want to. So maybe the one big, beautiful bill, as they're calling it, it's not going to move forward in this deficit form and fashion that we thought. Okay, gold, not so strong, but silver and copper explode to the upside. Oil has a strong day too here, so maybe there's a growth flavor to this market today. Currency is bad for the dollar, which admittedly, I'm out of any long dollar positions now in the euro as a result of this. But we have a lot to discuss. We have new highs here coming around the corner. We have ridiculous headlines for sentiment checks, least of which, of course, our resident bear has abandoned his bearish positions. Ilya, apparently, where I sent you the snippet earlier. We're using the blockchain to design shoes in space now. Okay, Ilya, what do we make of this, though? Volume is low. Volatility is absent. It's an 11.5 IVR on the chart right now. What's doing here?
It's very tough to fight a market like this, and I stopped 2 days ago. When we breached the swing high from earlier in June, that U.S. CPI data high, I picked up and left at that point. I mean, obviously, I've been taking on the short side with very small positions, very risk defined, only verticals and only in the ETFs to keep things nice and small and keep risk very, very, very constrained. But even so, you're not going to argue with the price action here. And when we, certainly I'm not, when you took out that high on the closing basis there, you can see it in the chart. That gray box is at that high, and then you clear that, and so I hung it up right there. I don't think anything has changed for me from a macro perspective, but as ever, if you're right at the wrong time, you're wrong. So I'm not going to sit here and continue to have capital get tied up here. Obviously, these moves don't scream conviction because there's so little volume behind them. We're heading into the July 4th holiday. We've got the July 9th cliffhanger on tariffs that apparently the president says doesn't matter. There's another one shortly thereafter in mid-August. That's the cliffhanger with China. That one probably could matter. But all of those but qualifications don't put any money back into your account if you're short and the price is going up. So I'm not going to fight this thing. I've backed up. My song remains the same, much as it was in the second half of last year. We are operating in a global economy that is dangerously near recession because it has one and only one point of failure. In fact, we're about to get PMI data out of China next week that tell us Europe and China are at standstill, much as they've been over the past 12 months. The only growth that there is U.S. growth. It is a level step down from where it was in the second half of last year, but it is positive. And as long as that doesn't fail, fingers crossed, apparently the markets are okay with pretty much anything. And helpfully, the Fed hasn't started cutting rates, and maybe there's a degree of narrative here saying, well, they've still got all the cutting to do. So if only the economy were to take a step in the wrong direction, here they come. They want to be cutting. They'll ride to rescue. Markets, incidentally, think that they're crazy for not cutting already. In fact, you're seeing the dovish divergence in markets building out here, as we've talked about yesterday, Thomas. So I think we're in a situation where I have not been disabused of any of my bearish thinking in sort of macro terms, but in practical terms, I'm hands off until the market tells me it's time.
Thomas, stocks are continuing to run up higher here. When you and I were speaking earlier today, you said that you weren't into chasing at these levels. Why don't you think this is a good idea to latch on and ride the bull wave right now?
Yeah, I mean, I was thinking about getting a position this morning because there's no reason in the market to keep the buying from going, right? The durable goods orders was pretty good. Initial jobless claims didn't send any warning signs. We're focusing on lower rates now, which we saw in the bond market today. Kept predicting that. It was the light volume holding me back. So it's kind of like you said, a melt up. And I just, I feel that itch when I'm trying to go long of maybe I shouldn't do something. So I'm still holding back here. Of course, in retrospect, I mean, getting long yesterday was probably a good thing, of course. But I said if I was looking at something, I was going to take that SMH position. I had a good run in it today, but I just didn't jump on it.
I think that's one of the key features of this market right now. When you look to something like SMH, the rip higher here after a few days of consolidating back at the end of May, or rather the middle of June, excuse me, now running to an all-time high. The sector performance here is really quite strong to quite strong today. Only 3 of the 25 are in the red. Real estate is down by 0.12%. IYR, that's the weakest sector ETF. That's nothing. XLP, consumer staples, that's fine, being a weak one on a day where you have SMH. It's charging higher, up 0.73%. But that's not even the most impressive name on the board. I'm more interested in what's happening with the regional banks here. The regional banks are sitting at multi-week highs now. This chart's a bit of a mess. Let's just make a small adjustment and clean this up. It looks like there's somewhat of a ceiling here, right around 60 in KRE. But regional banks may be breaking their downtrend finally, and the Russell has been lagging for a long time. So if regional banks are up, semis are breaking out to new monthly, new quarterly highs, returning to the highest levels that they've seen since last summer. It's just going to be really difficult for bears to get something going in the short term, right? Ilya, if I'm thinking about this as a bear, my point of interest is not in what's happening today or tomorrow, but in the fact that volatility is getting pushed down across the curve the further you go out in time. And if I wanted to express a bearish point of view, I could do so a little bit more cheaply than I could have otherwise. And it wouldn't be through something like selling a call spread up here, although given how the market is in a low volume, low vol float, you could try to do so if you get the timing right, where if you think it's going to go up like 0.4, 0.5, 0.6% a day, whatever, just go out deep enough. But the play may be to look for some downside protection here. There may be some complacency in this market. Mm-hmm. And before I go into this further, if only to expressly articulate the headline that I shared with you yesterday, and I shared this on Futures Power Hour today, which I don't know if people saw this, but it's worth reading in full for those that aren't the audio. They're visual, excuse me. They're not audio. Let me read this out loud. A footwear startup is teaming up with 2 space companies to design a shoe in orbit as part of a mission to make artificial intelligence and blockchain less expensive and more eco-friendly than it is on Earth. Orbit's Edge, a company that supports AI and blockchain applications, and Copernic Space, which offers digital marketplaces for space assets, plan to send a solar and battery-powered satellite to space equipped with a computer that will use AI automation to produce a shoe design.
They have all the words in there.
Scintilla brand. The mission is expected to launch on a SpaceX Falcon 9 rocket in early 2026. I have no idea what I just said.
I mean, this is the Pets.com Super Bowl ad of stories. I mean, this is the kind of thing you read and you go, wow, remember how Polaroid decided that they needed crypto in their name and their stock actually did bounce, no matter how ridiculous of a thing that is? Yeah, there we go. We're designing AI and crypto shoes in space. This is ridiculous, obviously, and is emblematic of the kind of excess of risk appetite that you might be worried about in an environment where this is the year, next year, when you refi all the COVID debt that companies accumulated at basically no interest. The Fed doesn't want to cut rates. The U.S. economy has slowed meaningfully since last year and is the only one that's growing of consequence. Yes, let's design a shoe in space. This is the kind of thing that happens at sentiment tops.
It feels like it, doesn't it?
Yes.
Like Long Island Blockchain Corp.
Can we get an Economist cover? I'd like an Economist cover saying like la-di-da, all is well. Can we do that? Somebody, should I start to do to the managing editor of The Economist what you do to the Ayatollah and just start to troll her on Twitter?
Well, which, by the way, I just have to send out like a heartfelt appreciation. I did get a direct message last night with someone sharing their trolling of the Ayatollah with me over DMs.
It's a community now.
You know, Team America. Okay. We were talking about a potential bearish position in the S&P 500 today on Futures Power Hour. There are really two ways to articulate this view. You could, of course, do the out of the money thing where you go to like the 20 delta. We'll look at, say, like long the 25 delta, short the 20 delta. It's about 100 points wide here. It's a 24% probability of profit, high convexivity, basically 6-to-1 on the risk to reward. But what Jamal was kicking around here as just an idea is if we go over to a long put spread that's already in the money, and it gives you basically a coin flip probability of profit, even though the max profit to max loss is tilted in your favor, basically 3-2. Volatility is cheap right now is my point, okay? And this market does feel complacent for a variety of reasons. My own outlook here, not that it's been accurate this year because having just seen the tastylive SPX predictions by quarter, mine was 6,300 for Q1, 6,000 for Q2, 6,300 for Q3, 6,850 or something for Q4. Although, again, I would push back and say at the start of this week, the S&P 500 was at 6,000. So with a week left in the quarter, it was pretty darn close. But I see this as a market that is going to hit that roadblock in August with those China tariffs, right? We have a White House comment today. Carolyn Leavitt, the press secretary, says that the July 9th deadline is not critical. We're not looking to extend it, they also said, but it's also not critical. It's because you can't have a world in which you have lower tariff rates on China than you do on all your allies and friends. It just doesn't make any sense. It's illogical. So July 9th isn't anything, but August 12th is. And looking at some option plays with relatively cheap vol on the other side of August 9th for a brief window of market panic, perhaps, as the summer goes into its second half when liquidity drains and more experienced traders go on vacation to Ibiza or the Hamptons or the Ozarks, wherever, okay, the junior traders tend to panic. I think that if you're going to be bearish right now, not that I am in particular, because I want to chase this high of being a dumb bull that just buys out of money the calls and watches them print. I missed it so much, Ilya. This needs to be now like risk management, okay? Like, what are we doing to reduce our beta weighted deltas if we're running this market up higher? How can we position so that we're protected from some downside? How can I stay on the bull train with also keeping something in my pocket that if this goes sideways, I at least can get out relatively cleaner? And the cost of that insurance is pretty cheap. So I think this is the primary consideration right now. It's a bull market. We're running to the upside. I'm staying on as long as possible. I want to see 23K print. That's where my long calls are currently situated. But once we start to get up there, looking back to like 22,000, 21,500 at NQ as some safety, I don't think it can hurt us.
It doesn't look like you have a situation here that is going to look for intricate catalysts or kind of high-minded ideas. This thing is either going to hit a sentiment extreme or it isn't. And it's probably going to have to be something very obvious or, as markets often do, nothing at all, where you just run out of reasons to go higher because everything is in the price and nothing else good is obviously in the speculative window.
Thomas, what's standing in the way of this market? Tomorrow we have PCE. Friday, tomorrow feels like a day to go golfing for most people. End of quarters Monday, non-farm payrolls next Thursday. Thomas, do you care about the non-farm payrolls report next week? Is this something the market is particularly worried about in your view?
I do, and I think, volume is going to continue to be light tomorrow. I wouldn't expect it just to bounce back on a Friday. So I think people are going to come back next week. We got the NFP a day early for the holiday. So kind of a condensed trading week. On one hand, there's a lot of people away. On the other hand, it's condensed from 5 into 4 days. So perhaps, we could get normal volumes or it could continue to be light. But the reason I was waiting to get long is I was waiting for some catalyst when it's really just a confluence of factors that have been holding the market back that have now cleared, right? So like Ilya said, we have to hit a sentiment extreme. And until the NFP, we really don't have anything that could come through where it's going to really unhinge this rally. So on one hand, I want to chase because the price action is telling us, we're going higher. On the other hand, I feel like I'm already a little late. And when I get in when I'm a little late and trying to chase, it's worked against me a few times. So for right now, I'm waiting. But next week, I think I'll have to pick a strategy to play this out for the NFP.
Do you think the Fed cares about next week's NFP, Ilya? I know that we've heard from Bowman, from Waller, and now today from San Francisco Fed President Mary Daly, that a rate cut may be appropriate and will be something that's discussed in July. She thinks that September is still going to be when the Fed cuts. She says in the fall. Okay, so I guess September, or was it an October 30th meeting this year? It's late October again. Whatever the timing of the cadence is, it seems like her mind is that they're getting a cut in the fall in September. But July is not going to be a meeting where they don't even entertain it. So does non-farm payrolls, could non-farm payrolls next week let me rephrase this a different way. Isn't the best outcome for bulls right now for non-farm payrolls not to matter next week? Because if it does matter, it means that the July needs to think about a July cut.
Well, so there's a couple threads at work here. First off, the markets think that the odds of a July cut are more meaningful than policymakers seem to have hinted. So we're looking at a 20.1% chance of a cut in July. That's not nothing. And it's certainly up a meaningful ways from 12.5% a week ago. And let's note, a week ago was the Fed meeting. So in the immediate aftermath, right, here we are on Thursday. Exactly 1 week ago is the Thursday after the late afternoon FOMC on the 18th on Wednesday. So the markets heard the Fed. They went, right. So you don't want to cut, and you're not sure what to do, and you think you have all the time in the world. Yeah, you're likelier to cut in July. And in that period, since they heard the Fed, they've built out all kinds more easing into 2026. The Fed said 25 basis points in their SEP. The market said, right, sure, 62 basis points.
I mean, we've added basically 40-ish basis points to the rate cuts by the end of next year in just the past 3 weeks.
Yeah.
We basically we've almost added 2 cuts to next year's calendar in 3 weeks.
So the market, so there you go. The markets they're not just saying that, oh, you're behind the ball. They're saying, no, it's happening. And frankly, you're likely to move both sooner and later in a much more dovish way than you're suggesting. So will the markets care about NFP? Well, it probably depends on what the number gives us, but NFP has been so muddy with the revisions that unless the number is completely unmistakable, it's very difficult to hang your hat on what comes out, and you really have to focus on the jobless rate and whether you finally get north of 4.2%. Thomas was mentioning earlier, jobless claims, not terrible today, but looking at the 4-week average, this past reading is a bit of a step down, but it's within a hair of last week's result, which was a 2-year high. So it's not like the labor market isn't deteriorating. The average NFP revision so far, the running 12-month average, is down almost 17,000 on a given month. In the latest numbers, the 2-month revision was 58,000, lower 48,000 before that, and on it goes. These numbers have been routinely revised weaker, and the average for the 2-month revision has been negative going all the way back to January 2023. So let's see what these numbers give us. Last time, the expectation was 130. La-di-da. We got 139, so only a touch better, with a 58K downside revision on the preceding 2 months. Was it a good report? You tell me. It was a little bit better at the headline and much worse for overall job creation. So it's a curious thing that we're looking at here, but the markets clearly seem much more interested in what they think. Bonds are rising, dollar is getting smacked, more expectations for rate cuts are entering than what policymakers are saying. I don't think the markets care very deeply here about what the Fed is saying. I think the biggest risk for markets is if NFP is really strong and it turns out they're the ones that are offsides. The best case may be actually a relatively soggy number as long as it's not catastrophe bad, where the Fed might be shown to be very, very behind the ball. But that seems very unlikely just by the nature of kind of the spread of probabilities. A really out there tail risk result is inherently unlikely. So you're looking at probably something middling, and the markets would like something softer. Because if they get softer, they get validated. The Fed looks like it's wrong, and then maybe July really is live. Or at the very least, maybe the Fed says all the things that they need to say. So that by the time we get primed for Jackson Hole, there's a big, fancy Powell speech that sets everybody up, and in September, maybe we go big again. And maybe it turns out that we get a 50 basis point cut again because
I've been saying that
we should have got in July, baby. What were we doing? So
that's the funniest outcome. Like last year was Powell declaring inflation being dead. That's what 50 basis point meant, right?
Yeah.
Trump didn't like it because it was a sign before the election that the big story before the election was over, and obviously it wasn't. But that's how it was spun. So 50 basis points in September here, how would that be spun? Would that be...
We should have got in July.
We should have got in July, and the economy is probably weaker. So just... Yeah. But if the data holds up, right, Thomas, isn't this kind of like the dream scenario that you're seeing for bulls here in terms of rate cut pricing? all of the fears, the bricks in the wall of worry, they haven't materialized. And so the market's like, well, they're going to materialize, so we're going to need more cuts in the future. But in the meantime, the market's like, well, we're discounting cheaper money at least. And so we can party until the damage comes. It's not that the market really loves the Fed cuts, needs them, but like, hey, we have more easing coming down the pipeline. Who cares? We can run this thing up.
Yeah, it's something to underpin the market, to underpin sentiment. So, I mean, the initial jobless claims wasn't bad, but if you look at the continuing jobless claims, those were the highest since late 2021.
Yeah.
So it's kind of a good scenario if you want more cutting, because it's saying that companies, they're laying off, but they're doing it at a very steady rate, and they're not hiring that much. So people are getting forced out of the job market. It's taking them longer to find jobs. So that's not a catastrophe. So if the numbers come in slightly weaker, those July rate cut odds all of a sudden go from perhaps 20 to up to 40, 50. And then the market is hanging its hat on getting a July rate cut and then a September rate cut. But yeah, you're right. If the September comes in 50, of course, a 50 says we made a mistake somewhere. Because otherwise it's going to be a 25 like they've been projecting. So I agree with Ilya. The best case scenario is probably slightly under expectations or at expectations.
We turn to the halfway mark of the show. We've been talking about equities here. Bonds had a pretty good day too, guys. It's after hours, technically, or after the market is marked to close. But we see that ZB here is now at 115 and 2 ticks. It's currently sitting at the highest level that we've seen since the start of May when it bumped up into here. It's been a level where the market's been struggling to break through in recent months. Ilya, it feels like if you're going to be a bond bull, you kind of have everything, going for you. Oil prices have come off, so the inflation scare is gone. And also, oil being too high is disruptive to growth. So,
That's right.
Right, at least we have that intact. We turn around and think about what's going on with the Fed. They're not cutting in the short term, despite a lot of pressure to do so. And two things I think actually, two ideas that we've shared here in Overtime in recent weeks. One, a Fed that's refusing to cut will help the bond market stabilize and move up because it's not reflationary. Bonds are up 4 or 5 points over the course of that idea. It's been slow and hasn't been great. Like it's not moving fast, but it's working. And the other one was that equity traders would be forced to chase this market through the end of the quarter because of positioning at the start of April, because everyone just being off sides, people continuing to short the market on the way up. And then that's, of course, underpinned by the rationale. You can't lose money in a bull market. If someone's giving you money to trade for them and you underperform SPY, you're not justifying your job. So
it's not that you can't. You can. You're just not allowed to.
Right. Well, so bonds, though, are kind of, Tuesday you said if the bond trade's going to work, it's going to work slowly because bonds shouldn't move quickly.
You want it to work slowly.
Why is that? Can you just reiterate?
You don't want bonds to be doing crazy things. You don't want for the markets to be having volatile opinions about the long-term faith and credit of the world's largest economy. We saw what that looked like in April. Those are not happy times. You do not want, if you're any kind of optimist about anything, frankly, because the Treasury bond really is sort of the underpinning of the global economy, as is the U.S. dollar. This is the cash choice of commerce. When it comes to the dollar, it's the benchmark risk-free asset for global finance writ large when it's the U.S. Treasury bond. So you don't want for there to be chaos here. And sure enough, no chaos. We're just slowly crawling higher. And I've been long the long end for a while. That's the part of my portfolio that is helping to paper over some of my sins elsewhere. Most recently, I extended duration about 10 days ago. I've still got 50 days in these TLT call spreads that I have on. So I've given myself lots and lots of duration. In fact, that's been my MO basically since the beginning of the year, to stay small with more duration than usual, to kind of dilute my exposure to directional delta and really take time with these markets because they're very choppy. The only place I haven't done that is in FX, where I've just been outright trading the micro futures and spot. And frankly, that's been my bread and butter all year. So looking at the bonds here, they're doing the thing you want them to do. If you're bullish, what you want is an orderly, steady stair step. That's exactly what you've been seeing since basically the second half of May. On we go.
Thomas, you have any strong feelings on rates right now? Notes are trading at their highest level since the start of May. We can look at this from the yield perspective. 10-year yield is now down to 4.239%. That's good news.
Yeah, I got long a call spread in ZN. I still have to get that on the follow page for the 57 days out, so I gave myself plenty of time at the 112.5, 113. But yeah, like Ilya said, nice and steady. You know, this is definitely a bull market that we're in for the trend right now. You know, with the time I gave myself, I'm willing to weather any pullbacks, and you know, pretty much what I'd expect to see if we pull back is something to like the 21-day EMA 111.075, maybe somewhere around there, which you have, you know, one of your support resistance lines right there pretty much. So that's kind of what I'm thinking. I didn't want to wait for a pullback to get in here just because the time I have is, I feel fine with that. But I think, you know, the view now is rates are going to come down. You know, it would take something pretty big to throw off the calculus for where rates are going. And if that's going to happen, you'd see a lot of dysfunction elsewhere in the market too. So I just want to get some long exposure here. That's my only position in bonds for now.
I think I might make an adjustment to my directionally neutral positioning in notes over the coming days, if only because we're starting to get away from the midpoints of the trading range. I say I might because I still have fairly decent strikes to make this work. Given the volatility when this trade was put on, I was able to sell the guts basically at the extremes for the year, 109, 114, right? I still have that correct here. 109, 113. And buy back at 108, 114. So unless we go down to the low in February or to the high here from the start of April in the next 7 trading days, which I guess is possible, but I think that directionally neutral continues to work. The only question that I find myself asking these days, it's a 16.4 IVR. I guess that's richer than what we're seeing in ES or in Q, but there's just not a lot of vol in bonds. And I know that when vol gets this low in notes and bonds, people tend to look elsewhere. What's the trade here, though, Ilya, for the next few months? I think you and I were on board with the chop, and the chop hasn't stopped.
Mm-hmm.
But is the chop still the play if we have to start having conversations about, wouldn't it be funny if the Fed had a cut by 50 basis points? Because things are so crappy and they're running so far behind. Is that a good thing for the bond market?
I mean, I'm perfectly happy to stay long as this continues to kind of begrudgingly work. And if the Fed throws us a little bit of a bone here with a level change in rates, yeah, okay, if you front load a bunch of cuts, then maybe you get to a place where inside of a 2-year window, you get fewer cuts downwind because the Fed has finally jumped. You kind of saw this with what happened with the 50 basis point cut in September last year, right? The markets were yelling at the Fed from mid-April until that mid-September cut. You have to cut. You have to cut. You're going to miss the boat. You're going to miss the boat. You got to go. You got to go. And the Fed was resisting and resisting and resisting. And all through that resistance, bonds were rallying. The dollar was getting clobbered across the board because the market were saying, okay, so you're not going. That means you have to do more later. It'll be more dovish. It'll be more dovish. Then when the Fed finally goes and they go 100 basis points this year, 50 up front, 2 more meetings left. You do the math when those rate cuts are coming. We're locked in. And the market goes, whoa, hold on now. That's a little bearish. That's not what we said. This is a little too extreme. You've overshot. And then bonds sell off and the dollar rallies into the end of the year. So if the Fed does 50 basis points in September, the big question will be, do the markets think that's too much? What does it look like in relative terms? Right now, the Fed is baking in 50 basis points for the year. So unless that calculus changes, and I suppose we'll have to watch what they do in July and definitely watch what they say at Jackson Hole, because that'll be a kind of lens framing exercise. Then we'll see. Last year, it was very clear. The Fed came out at Jackson Hole. They gave the tip of the hat in the dovish direction, and then there they go in September. If this year they reframe the lens again at Jackson Hole, and it's dovish, we'll see. Because right now, the markets are basically in line with what the Fed forecast is, at least for this year. It's 50 basis points. So, and frankly, a little bit north of that today, it's starting to creep. It's approaching 60. So, we'll see. We'll see where the market is set after Jackson Hole, when it's time to go in September. But if the market judges that a 50 basis point cut is appropriate, and they seem to be angling that way here, the ongoing disappointments in U.S. economic data over the past month, today's durable goods jump, and it was a big jump, notwithstanding, the overall sort of vibe in U.S. economic data has been generally negative for about a month. This would give you a sense that if the market thinks that 50 basis points is right, bonds keep going higher. It's contextual. It's not automatic.
Well, that puts the dollar in an odd position here, guys. I know the sentiment's cooked, and I just took off a position today. I tried to short the euro, and it had a nice few days.
I've been taking them off since the beginning of the week. This is not working.
It seems normal to me because it's, okay, sure, all of this wasn't normal when we were going through the whole tariff nonsense. But since we reset the table, the dollar has basically been following the bond market. Lower yields, weaker dollar. Lower yields, weaker dollar, right? And so I don't know if we can call that a surprise. Technically, this thick white line here is your 50 SMA. We hit it in February. We hit it here again in May. We fail up against it earlier this week. That engulfing bar brought us back down below the 1 month and the 1 week as well. So the bearish momentum is clearly here still. Although I took a small loss in the euro position, again, it was put in place with enough duration so that if we breached 117, be able to get out at a small loss, and it was like $275. We go over to 6J, and this is where I am now starting to try to lay out capital to get short the yen. This is still a currency that has a 2.93 Z-score in terms of speculative positioning over the past 20 years. It is outrageously crowded right now. And we've seen it more crowded at the start of April and May. But never before in its history has it been this long. Okay, if you were to compare positioning in the market today to literally any other period of time prior to the start of 2025, that would be the highest, biggest net long position you've seen in the yen. Period, end of story. So I want to fade this. I don't want to be involved in a long yen trade at the moment. I want to be involved in a short yen trade. So right now, I'm going to put this back on if it doesn't get filled. I'm trying to start to buy into the 68, 67 put spread with 71 days to expiration, basically looking for a return down towards these range lows that we saw in April, here in May, and again just a few days ago in June. The yen to me is cooked. It doesn't have a reason to be up here. We got the bounce that I was looking for. I wanted the bounce earlier this week. We mentioned get up to like 0070 and we could start to look bearish again. It happened today. So I'm going to poke around on long dollar in a very narrow sense because of a crowded market.
Yeah, I mean, I thought that we were starting to get a little bit crazy here in the dollar, and I actually flipped over my shorts into small long exposure Friday last week, thinking, okay, we've probably hit something here. There's a key technical level. The risk reward is good. The trade is terribly crowded. Let me take a step back. Let's turn these cards over. The Fed doesn't want to cut. They've just said so loudly. We had Powell testimony this week where he wasn't going to say anything different, and he didn't. And it hasn't worked. Probably the most dramatic places I'm looking at isn't the yen. The yen has been kind of consolidating in what's increasingly a kind of triangle-looking something. But just look at the euro. Look at the pound. They are scorching. And
yeah, that uptrend the pound was breaking a few weeks ago. It's technically back above it now.
That's the thing. So it started to maybe crack, which is what got me short. And no. That's not what's going on here. Even the Canadian dollar found a little life here against all odds. But I mean, look at the euro as your kind of benchmark for the most liquid U.S. dollar counterpart. I mean, the dollar index is essentially just the euro upside down. This is unmistakable. This is every opportunity for a double top and then a clear,
never happened.
Just very, very, very obvious first page of a technical analysis textbook bullish breakout. Like obvious resistance, test, hot knife through butter.
Well, I mean, that was the risk outline when we took the trade, right? It could be an ascending triangle still.
That's right.
But I guess, Thomas, given the positioning that we know, where people are far too long the yen and the sentiment on the dollar is still very bearish, would you take multiple cracks at trying to get long the dollar here, even if you have a few trades that miss out? Do you find the risk to reward appealing enough?
Well, last week I got out of my short put spread on the yen, pretty much at the bottom, and then I got into a short call spread on the euro, and so I've been burnt on both sides now. So I'm surprised the dollar's gone this low. So one of the reasons I got that trade on the yen is because you told me last week that the positioning was so extreme, and I agree that that kind of trade can't last.
So we're saying blame Chris.
It's your fault.
I like it.
Yeah.
Well, okay.
We're saying blame Chris. Good.
Yes.
I'm on board with
That's
this.
fair. I'll wear that.
Yeah, and then last week I tried to sell the call spread on the euro for this double top, and of course that hasn't worked out either after being long the euro all year. So I think, the underlying reason is the dollar's weakened so much. I'm wondering for the euro, are growth expectations lagging what the market thinks for Europe right now with the defense spending and everything else? Is it going to be a story of Europe has better than expected economic growth over the next few years? Are we starting to price that in now? Are people trying to get ahead of that? Or is it just the dollar is, continues to weaken for, it surprised me how much it's weakened. So, it's calling, do you try to call a bottom now? And I'm not going to do that after two bad trades within the last week.
Sure.
So right now I'm going to stay, I'm going to keep my euro position on right now and hope for a pullback to take that off at either, at unsure, a small loss. But I'm going to step back and reassess the currency market with not being able to really see what the dollar is doing here.
Ilya, one thing that's really important to me is showing signs of personal growth. I don't often do it, but a year ago, you and I were trying to get long the yen because of positioning. Everyone and their mother was short the yen.
Yeah.
And it felt like every 45 in, 21 day out, I would buy some yen calls, and then I'd watch them evaporate into nothing.
Oh, we got cooked.
Well, it's very generous of you to throw yourself into the pot with me, because
I was long the yen for similar reasons, although in fairness, I didn't stick around as long.
But July comes around, and I say, I've been doing this for 6 months. Maybe the positioning argument isn't going to hold up, but of course, positioning is like a glacier. It takes time. It just doesn't happen. People don't just liquidate everything all at once. And so I stopped buying the yen. And then last July, the yen decided to do, what did the yen do last July? Oh yeah, it did this. It went straight vertical after pushing on that string. It was going down, buying calls, just like 100 pips out of the money every time.
I managed to catch a little bit of
you
it
caught
on the second leg of it.
That's why I'm saying, like, don't throw yourself in the pot with me. And the point I'm getting at is that there was a macro, a positioning, not a short-term view that was worked out. Like, this is going to break at some point. I just need to stay solvent before the market snaps to being rational. And I could have been. And I just got tired of losing little bits of money. And had I just stayed with that, okay, this positioning is going to break at some point, I just have to be patient here, and I'll catch a wave. I was right. I just fumbled the ball. And so it feels like this is the same thing, but on the other end right now for the yen, where we have this extreme positioning. It's sitting around, being short the yen. You've been getting chopped up. You've been getting eaten up for the past 6 weeks, 2 months, right? You haven't been able to get that downside traction. And I just can't throw in the towel this time, because I need to show that personal growth where I understand that if it's a good idea, I just need to stay solvent long enough and stay small enough so when it does hit, I don't, if I'm wrong, I don't get wiped out. And I didn't last year. I just got bored. That's not a good excuse. That's not staying mechanical. It's not staying within the confines of the trade idea. Thomas, I understand why you're not going to call a bottom here. But a year ago to this day, I was on overtime complaining to Ilya that I was sick and tired of trying to be long the yen, and then it spit in my face immediately the week after. I just can't do that to myself again. Mentally, it's not going to be good for my mental health. Okay, I'd rather actually lose
Michael
money.
Burry in 2007. You're not wrong, but you're early.
Maybe I'm early. Maybe that's it.
This is the perpetual thing that I'm always talking about when I am entering these tiny little pinprick shorts against the stock market that I don't believe in. It's because if the market is telling you something, technically it had already fallen by the time I left. Technically. When I take these little stabs, it's because the price action has created some kind of risk-reward opportunity that's attractive. And maybe it's right and maybe it's wrong, but I'm going to structure it in a way where it's asymmetric enough that if I lose a little, and I'm okay losing a little multiple times. If the idea seems legit, if the price action tells you it's go time, it's why I didn't stick around in the yen as long as you did and then got back in. I was waiting for the price action to show me. And I'll take little stabs like that, and I'm okay with losing on quite a few of them, as long as one or two really pay. And that's sort of the thing you have to do, I think, if you're going to take a macro perspective on markets, because timing macro stuff is a fool's errand. You never know. If you have some kind of macro narrative and you think it's right and you see evidence to suggest it, when the price action lets you, take a stab. You're probably going to be wrong a few times.
I always go back to the baseball analogy. If you're scalping, you're a slap hitter. You're just trying to get little singles all the time. If you're a macro trader, you're the slugger, right? Like, you're going to strike out a lot, but you're going to hit the home run every now and again. And like, it has the net expected value is positive. Like, you want the guy who strikes out a ton and hits dingers, because it's good for your lineup construction. You can't just have a guy who hits 300 and only gets singles. You're not going to get anyone around the bases. Thomas, I wanted to ask you a question before we end the show, because energy is back in focus. We called this out a few days ago after oil had its big 10% decline. Ilya, you and I were talking about exiting short deltas, flipping to directionally neutral, understanding that previous sell-offs of this nature, when you have 10% or more over the course of 2 days, you usually get a window where there's a little bit of a bounce back over the next day to week. Next day was historically right around 2%, the next week a little bit around 4%. So the fact that oil has stopped falling, so to speak, I don't think surprises anyone in this room. Thomas, you mentioned to me earlier today that you're surprised natural gas has fallen as far as it has. You and I both, I think, are in similarly structured trades where we've been selling put spreads down against like the 3.3, 3.4 level. How are you feeling about this now, given you've had a full day to digest the price action and really what's been a week of fairly aggressive selling in natural gas?
Yeah, I was feeling worse this morning, but we trimmed a lot of losses. So the EIA numbers came out today. I think it was a 99 billion cubic feet build. The 5-year average is right around 78 for this time of year. So we're building more than expected, and we've done that for a couple weeks. So I'm still keeping my short put spread on at 3.25, 3.3. And I think that aligns with some technical levels that, are buy points in the market. And kind of right today, we saw buying when we got down near 3.4, you saw the buying start. So I'm going to stay in it. I was thinking about taking my the call spread side off, because I have a short call spread on as well for 32 days out. So I'm going to take that off in the next couple days here, because we're starting to run out of time. I'll leave the put spread on until around 24 days. So I'll wait until next week to take that off. And I'm expecting, of course, that 3.4 level. That's all I'm looking for it to hold. If we drop below 3.4, I'll take that short put spread off and reassess. If the 3.4 breaks 3.2, 3.0, we could drop under there, because there's some room that we haven't traded at for quite a while. So 3.4 is kind of like the line in the sand right now. It's been really hot the past week. The U.S. has been in a heat wave.
Has it?
That should have, you know more than anyone. That should have, reduced the stocks more than expected. But at the same time, you had wind and you had solar displacing a lot of natural gas demand. So it was sunny and windy everywhere that it was warm last week. So you kind of got a canceling out of that, the expected effect that you would see in natural gas, which is really, really hot, a lot of demand, strong inventory, or a less strong inventory build during the summer. That didn't happen. But the buying today at 3.4 is kind of encouraging. After 4 or 5 days of selling, I think if you want to get long here, I'm already long on that side. I wouldn't mind at all.
Yeah, come help us. Come help me and Thomas.
I got out of my oil short yesterday, and that's the only thing I'm doing in energy right here. This is one of the more confounding spaces. I'm not eager to jump in one way or another.
Well, with that, overtime is out of time. We'll be back in a little bit. Ilya's coming up next with macro money, so stick around after the break. I'll be back later today for the Price of Truth with Victor Jones. So see you in about an hour's time. Until then, though, for Thomas Westwater and Ilya Spivak, I've been Chris Vecchio. See you on the other side of a break. You're watching Tasty Live. Ilya Spivak with Macro Money up next.
See you there, everybody. Well, the markets continue to melt up, and it seems like they're doing so for no particularly good reason or with particularly strong volume. Nothing especially shocking on the calendar. No big new headlines from geopolitics or from the world of economics, at least over the past 24 hours. Nothing to really suggest that we ought to be screaming higher or not. But nevertheless, the markets take their cue, and we're approaching the year-to-date highs on the major stock indexes. The U.S. dollar is lower across the board, and the markets still seem to be building out expectations that the Fed is going to end up much more dovish than expected, even most importantly by the Fed officials themselves. So what is the backdrop for all of this, and can we sustain it? That's what we're going to task ourselves with trying to understand today on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we get the opportunity to get a check-in on the overall global economy here as we prepare for a update on Chinese performance early next week. We have earlier this week seen the June PMI data set for the US and the Eurozone and many of the other major economies. China is always about a week late, and next week we begin to see what they have for us for June and start to put together a more complete picture of the global growth environment. So that's exactly what we're going to do here. Look at what this data might give us and consider how it might impact the overall backdrop. Now, of course, that isn't to say that we are going to get a direct read-through from this data into the price action. It'll depend if the price action decides that it wants to care. But as ever, it is a game of relative value here and a game of watching and seeing whether assets make sense in their valuation relative to the back story and not just in isolation. So this will be a backstory shaping set of numbers and a back story shaping kind of a conversation where we'll try to figure out if the global economy really is in as good a shape as these buoyant financial markets seem to suggest. So let's begin here with what is expected. These are going to be the official PMI numbers from China. As with the U.S., there's two sets. In the U.S., we have the kind of global standard, the PMI numbers from S&P Global, and we have the Institute of Supply Management that creates a parallel survey. They poll a different set of businesses, but produce a similar thing. In China, it's somewhat similar, where you have the official numbers here from the China Federation of Logistics and Purchasing, CFLP. That's in conjunction with the National Bureau of Statistics. This is the government's PMI survey. It's tilted more so to large enterprises and state-owned enterprises, or SOEs. There's a parallel set, which we'll take a look at in just a second. That's from S&P Global in conjunction with Caixin. So we'll compare them and see what the story is. The picture here for China in these numbers clearly seems to be of ongoing standstill. So this was the reopening pop here when China finally jettisoned its zero COVID policies and reopened the economy. We can see there was a bit of a surge here. Manufacturing never really got off the ground in a meaningful way, but certainly letting people out from lockdowns was a boon for services. And so there was this services surge right here that lifted the overall economy. Since we're going to be talking about these PMIs a lot, let's just, for the uninitiated, very quickly explain how these numbers work. This is a diffusion index. And so the way that this is constructed is it's tracking the services and manufacturing sector's activity growth and the pace of that growth. 50 is neutral. That is neither growth nor contraction. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the pace of growth. The further you go below 50, the faster the pace of contraction. And so clearly here we can see, following on from the manufacturing and service sector lines here, the story is of anemic manufacturing for quite some time, but then you get that pop at the reopening in services that fizzles relatively quickly, and you settle into this multi-year standstill where you now have a situation, looking at these forecasts again, where you're hugging that 50 line. So basically going back to mid-2023 and through to now, China's economy is going virtually nowhere. Here's a composite reading from that rival survey, the Caixin and S&P Global survey. And here you see it's been a little bit zestier a year back than were the official numbers, a little bit higher on these readings. But as you work your way through the past 12 months, the story is increasingly negative and increasingly converging on what the official numbers are showing, so much so that the May number was actually worse than the official figures and gave us a slip underneath 50. And when you look at the composite internals, these are those Caixin services and manufacturing numbers. You can see services, since that pop in early 2023, they've flatlined, much as the official numbers would suggest. You saw that right here. But we can see that it's really manufacturing falling off a cliff in at least these numbers in May that really gave us that very disappointing overall reading. And so when we consider then what comes next, we sort of see both of these things pointing in this kind of stagnant direction. Now, this is not entirely new or unusual given recent months, and really sort of echoes, this is why we look at PMI numbers, incidentally, it echoes in the most sort of hard data you might imagine, GDP statistics. And this is, of course, the story now for 8 consecutive quarters, speaking to the issues in the world's second largest economy. Here's that pop at the open of 2023. Since then, we can see the economy has done virtually nothing. The pace has held relatively steady and dependably sub 3% for growth, which by China's standards, we can see here, the pre-COVID levels are meaningfully stronger. But looking at what we're seeing here, the biggest issue really is that when you compare nominal and real GDP, you find that real GDP for the past 8 quarters has been growing faster than nominal. And this is the spread. You can see that when you take the difference between nominal and real GDP, you get a negative number now. Whereas we can clearly see before that, the norm was substantially pointed in the opposite direction. So when you had Chinese growth here, and it was in real terms hovering just above 6%, you're now at very similar levels here, albeit you're hovering a little bit under 6%, but the makeup of the growth is vastly different. And what this speaks to, because of course, what is nominal GDP? It is the sum of the value of all the goods and services in a country, and it doesn't factor out the impact of inflation. When you add up these things, these are sort of nominal prices without being discounted for the prices themselves going up. And so oftentimes you can get an overstated version of demand, for example, here in nominal numbers because of inflation. So you take inflation out to get a real sense of growth. Now, if real growth, that is nominal minus inflation, is running above nominal itself, then you're discounting nominal by a negative number. And that's what you're seeing here. Economy-wide deflation for 8 consecutive quarters. Now, this is, of course, horrible news for any economy, because what it essentially suggests is vast overcapacity relative to demand. So lots and lots and lots of supply, much more than demand is able to absorb. And so the entire economy is essentially on discount. The price of things is getting marked down and in economy-wide terms falling, essentially the price of GDP falling, because there's not demand to absorb all of that. And essentially what you get is an economy that for basically 2 years here has operated without demand growth. So needless to say, what we're seeing in the PMIs